Mm. So, hey, yo, what's up for y'all on the YouTube replay? I hope you're having a great Saturday. Let me give you a quick stock portfolio update. I'll show you how we did on Friday. And then we'll look at some stocks that I think are pretty interesting to look into next week, or I'll even do that right now. For the first time ever, I bought one share of Axon. They are ridiculously overvalued. I'm talking more expensive than Palantir, more expensive than Tesla. But I just want exposure to this company. So I do not plan to add any more anytime soon. I want this stock to go down like 30% before I add more. I hope it does that. But some other stocks that look interesting here. CALM, Calmain, that's that chicken egg stock that I think looks pretty cool. Sprouts Farmers Market, if you're looking for a grocery store stock, I think this one you don't want to have is like a huge position. But I do, you don't want to catch a falling knife either. But I think they're worth nibbling on that position. Not because they're down so much, but because the financials and the fundamentals are very strong there. So yeah, here's our Weeble portfolio. Hey, what up, Looney? Shout out to the member Looney. Hope you're having a great Saturday. This is our Weeble account. It's our risk on portfolio. If you look in the top left, we're only up 13% on time in here, which is pretty surprising seeing all these big winners at the top here. But trust me, we have some hidden losers that you can't even see on here, like ChargePoint and Chainlink. I lost like 3,000 on those. So anyway, that's our Weeble portfolio. We also then have our dividend only portfolio. It's actually been doing pretty well. We're up 14% year to date. And check this out. This is what's so crazy. If we just go back to April right here, as long as you just didn't sell, especially if you bought shares during this April time, you made heck of money, potentially life-changing money. Like I made some life-changing money here in my Mumu portfolio buying the dip, but all you had to do was not sell during April and you're doing amazing. And here's all the stocks that I've chose to own in my dividend portfolio. Hey, what's up? He said, can we look at Amazon? Yeah, I do own Amazon, by the way. I own a lot of the Mag 7. Check this out in here. I got Meta at the bottom. I got Google. I got McDonald's as well. Yo, has anyone seen how crazy bullish Constellation Energy has been? This is the largest nuclear energy play. They actually own 30% of all the U.S. nuclear reactors in the entire U.S. So they own like 50% of the fleet, like the active fleet, but like 30% of all the entire U.S. nuclear reactors are owned by Constellation Energy. Purest play, they own like 22 nuclear reactors, I believe. And there is no close second. Close second or second place would be Vistra Energy with like 3 reactors. So yeah, that's our Robinhood portfolio. Oh, let me give you an update on the Roth IRA. I believe our Roth IRA hit an all-time high on Friday, just barely. Like we were at an all-time high the day before, and we were up oh no, we were only up because of after hours. We were actually down that anyway. But yeah, we literally started this account just about a year ago, almost exactly. And these are all the stocks that we've chosen to buy in here. And mainly all of our gains have come from InnoData right here. This stock has been a monster of a performer. We're up 150% on them. I made so many videos about this. I've been pumping them for a while. So yeah, CEG about to break out. Yo, I hope so, Tyler. And then finally, this is our Mumu portfolio. This is, if you look in the top left, it's called our buy and never sell account. So basically, once I buy a stock in here, I'm committed to literally never selling any of these stocks. And someone's been saying Amazon, that's where I own my Amazon shares. Check this out right here. I think if you're like me and have the intention to just never sell Amazon, they're worth buying even right now. This is literally an ETF in one, e-commerce play, subscription play. So, like they're literally a UPS, an Oracle Cloud, an Instacart, a Walmart, all in one. They're the number one robotics play out there. Grocery store. Like I just really love Amazon, and they're the number one cloud play. Look at this. A lot of people know Amazon for their online website, but they're actually the number one cloud service provider. That's their AWS business. It's their highest margin. They're not making too much margin sending you a package overnight, but this cloud business, which is over 100 billion of annual revenue, has very high margins for them. And they've really been a story of margin expansion. And this is also a great thing. If we go to their cash from investing activities, their CFI, they're so much investing in the future. Check this out. Hey, stocks and sports, dude, no way. Thanks for all the gifts there. Yes, sir. We'll look at Lamb Research, or which one should we look at? Palo Alto. I love all those. Oh, Palantir. Yeah, we'll get to these. So yeah, Amazon's just so investing in the future. And here's how Jeff Bezos is so rich. Jeffrey Bezos owns 8.28% of a $2.34 trillion asset. So that's pretty insane. So yeah, but here are all the other stocks I own in here. Probably a lot of stocks you never heard of before. They're like a lot of like mid cap hidden gems, I think. Besides like Amazon, I've actually been thinking about selling at a DocuSign. If you're wondering what's happening with DocuSign the past couple of days, I kid you not, ChatGPT made something called DocuGPT. And then the freaking CEO, after the CEO and the CFO and some other executives literally sold the stock, like right here, after the huge 12% dip. Like, it's such a weird look. Okay, so let's look at let's look at Palantir. Is it a good buy-in? I think Palantir is a stock. I want to get exposure to Palantir eventually, but the valuation is too high right here. One thing that made the stock fall on Sunday, if you're wondering, or I mean on Friday, if you're wondering why did the stock fall, it's actually because, check this out right here. U.S. Army memo reveals a security flaw in Palantir's communication system. Anyway, that just was some bad sentiment towards the company. This is that maybe will hurt. Here's the government. The government's most of their business. Well, 55% of all the revenue comes to the government. The Air Force, the military, a lot of police stations use their software. And this business look at how growthy this is. This is why I want Palantir. This is insane. The revenue's up 49 after growing 23, after going 15. Like, the growth rate is growing on their government contracts, and not just government revenue, but also with S&P 500 companies, commercial revenue. This one's also at a record, up 50% year over year to a new record. It's insane. And, they're not just growing revenue, but they're growing profits. First ever $1 billion revenue quarter. And out of that billion, $330 million, it was net income. So that's an easy net margin calculation, 33% net margin. They literally have a fortress of a balance sheet right here. They literally have no debt at all. $6 billion of cash, up from $4 billion. Like, that's insane. Palantir is one I want exposure to, but they traded 120 times revenue. So it's a tough buy at this premium. They definitely traded a premium. Hey, what up? Palo Alto Networks. You know who owns Palo Alto Networks? It's everyone's favorite, the most genius trader of all time, Nancy Pelosi. So, these are super investors. They have to make all their trades public by SEC law. And one of the stocks that Nancy Pelosi owns is actually Palo Alto Networks. This is probably my favorite cybersecurity stock out there. I think I like it more than CrowdStrike. I like Fortinet too. These are all great cybersecurity plays. This one's, a great one. I like them because of their fundamentals, not just because Pelosi owns it. Like, this is a subscription model play. I love subscription model companies. It's so predictable. It's reoccurring. And look at the trend of their annual subscription revenue. This is insane. I'm pretty sure this is 80% of the S&P 500 uses their subscription. And the growth rate is just insane on the subscription revenue. I mean, just hits a new record every year, every quarter. And they're also profitable, making a couple $100 million net income a quarter, making nearly $1 billion of free cash flow a quarter. Like, I really like this one, and probably is at a bit of a premium, but that's the side of software that's being saved right now. You look at Adobe, you look at Salesforce, a lot of the software names are being hit by the AI thesis, DocuSign. But I think cybersecurity is a software industry that's actually going to benefit from AI, because as AI gets better, hacking will get better. We'll need cybersecurity to get better. And I think companies are really going to, anyway, I'm bullish on cybersecurity. That's a never sell, in my opinion. That's an industry you want exposure to. There's also some ETFs, I think ticker symbol BUG. Yeah, this is the cybersecurity ETF. Let's see what it owns actually. Palo Alto Networks, probably the top one. Also, it's Zscaler, CrowdStrike, Palo Alto. Why is BlackBerry in here? That's okay. All right, let's check it out here. Fortnite hasn't been doing that good. Fortnite's been doing a bit better. So it reported earnings, gave a bit of weird guidance, but it's recovered ever since, which is good news. Check this out. They reported earnings just because even after this fall, they're still a bit expensive, but it's reasonable. 34 times net income. And this is another cybersecurity software play. I love this one. Look at the net income. I mean, easily, these growth rates are insane, making $400 to $500 million of after-tax net income a quarter. This is another one that has a huge subscription model. Check this out, 40% of the revenue subscription. And this is what you want to see on the annual basis, just hits a record every year, every quarter. So that's another cool one. Do you have APH? I do have APH. And what app is this? Hey, what up, Will? This is, by the way, this is where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. It's my favorite app to buy stocks on. It's called Brokerage. But yeah, dude, I do own Amphenol. This is the company supplying NVIDIA with their copper cables. NVIDIA has this new NVLink spine product. I guess it's not too new anymore, but it uses 2 miles of copper cables, and they're supplying that from Amphenol, who just has spools of virgin copper. This is one of the best AI beneficiaries outside of NVIDIA. The growth is insane. The industry that they're in, this these specialty cables is supposed to like CAGR at like 25% plus till 2030. It's insane. So if we look at the revenue's up 56%. So revenue's up 56, but net income is up 108. What does that mean in English? That means they're expanding margins. They had a record margin, never had over a 19% margin before. And also not just, net income, but also FCF, which stands for free cash flow, also at a record. You get a cool yield too, 0.55% yield. The forward PE is really low. I mean, look, they're in these communication solutions. This is what NVIDIA's ordering. It just hit a record this quarter, 2.9 billion. They also have, I like how diversified that is. It's like 3 segments, harsh environment solutions. Check that out. Also at a new record. So this is just a really growthy, I think AI beneficiary. I wouldn't, but would I buy it here? Certainly not. But I would put them on the wall. I bought a share over here at 107. I didn't, I've been in this one for a while. We were buying shares. Dude, this April dip was still like a legendary dip of all time. We bought Amphenol during that time. We bought Comfort Systems. Oh, hold on here. Dude, one thing I found really cool about these HVAC stocks, weird point. These HVAC stocks like EME and Comfort Systems somewhat rhyme with Bitcoin, the trend of which I found pretty interesting. Comfort Systems has outperformed though. Anyway, all right. Let's see. HDV ETF. Let's check it out. Hey, by the way, if y'all are enjoying, don't forget to drop a like on the stream. I'd appreciate that. By the way, I don't sell anything. I saw someone in the chat. No, that's not me. That's someone impersonating me. By the way, I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. Anyway, here's HDV ETF, the iShares Core High Dividend. Let's check out what the yield is. You get over 3% dividend with this ETF. Not too shabby. And yeah, it's in the industry. I actually really love their top holdings. Like, this is a better buy than SCHD. First off, AbbVie is like my favorite out of all the like 3% yielding stocks in the whole market. AbbVie has got to be one of my favorites, if not my favorite. Like, they won't just have the dividend growth, but they'll have the stock price appreciation. They own Skyrizi, they own some good products. Johnson & Johnson. How's this one done? Wow. Johnson & Johnson, the staple, is at an all-time high. That's insane. What's the yield on this one? 2.66. They've been in some good names. I'm actually surprised in how good that's done. And the oil plays, oil is a nice one to be in because you get it. If we ever go into a recession or war fears, currency fears, oil does good in those environments usually. But it never outperforms the tech-heavy S&P 500, but you get the diversification in oil and you get the nice yield, a 3.5% yield with Exxon. And again, not going to outperform, but you get the nice yield. What happens is, hey, by the way, this is where you buy stocks on. It's a brokerage. If you want to get it, it's in the link tree in my bio, the very first link there. Hey, what up, James? Is that a ticker symbol? OPER? What is this one? The OPER ETF. This looks like a 4.5% yield. This might be like a bond ETF. Oh, it's a 1 to 3 week treasury bond ETF. Yeah. So this is kind of like that's the same thing as ticker symbol BILL. Do me a favor, check that to ticker symbol BILL. This one might have a lower expense ratio. That's a spider one. Same thing as BILL. Look at how these look on other apps. You always got to look at the non-dividend reinvested chart. Most people, when they look at BILL, again, we just saw the chart of BILL. It looked like flat. Look at it on the dividend reinvested chart. This is why you can never go to Weeble and some of these other charts, because it makes it look like some, amazing asset. But no, this is just 1 to 3 week treasury yield. So it's just T-bonds. All right. Let's see. SCH. Hey, Kaden, what up, dude? Good to see you. SCHB, he said. Oh, another ETF right here. So check this out. This is the broad market ETF. It looks like it's kept up with the S&P 500. Not too shabby. An ETF is just a basket of stocks. Let's see what it owns. It looks very similar to the S&P, NVIDIA, Microsoft, Apple, and then Amazon instead of, I guess that's right. Amazon's worth more. And then Broadcom, Meta, Google, Tesla, looks just like the S&P. I like it. And a 1% plus yield. Do you trade? I mainly just buy and hold great stocks. Hey, what up, Austin? What up, Rook? Hey, Rook, thanks again for the roses, man. I appreciate that. And hey, Ariel, no way. Thanks for the dolphin, the dog. Thanks for all those gifts there. Hey, if you got a stock you want to look at, Ariel Digital, let me know and I'll check it out for you. And what up, Trust? I was wondering, Nathan, about investing into dental stocks since it's a need daily life for people. Check out Oral. Johnson & Johnson owns Oral-B. Colgate is public, ticker symbol CL. They have the patent for their cavity toothpaste, whatever. I don't know if that Okay, so here's Rich Tech Robotics. This is like momentum. Like this is your momentum robotics play. There's no real fundamentals here. Like here's the thing that scares me away. I'm a fan of robotics. I love robotic stocks, but this is the thing that just scares me away. I've looked at this company. They have some basically revenueless partnership with Nvidia. That's all PR. This is a basically revenueless startup, which is tough. Like if we look like fundamentally, financially, this isn't great. Like the revenue was down 18% year over year, and the revenue was only a million. Like they're doing a million of revenue a quarter. They're losing 4 mil. I think this one is a tough, like real, like to trust real money and to buy and hold forever. If you're looking for a real robotics play, I wouldn't trust it in this one, to be honest with you. Um, but right now is the market to kind of own that one because it's how momentum-y it's been lately. I like Symbiotic. Amazon is a huge robotics play. Hey, Rand. Hey, and Will Lambert. No way, dude. Thanks for all the gifts there. I appreciate that. I really do. So someone said yeah, hey, let's do it. BE. Thanks again for the roses. This is BE stock. How do I learn stocks? Well, most people have like a course or something. By the way, I have no course book. I don't sell anything. So I have YouTube videos if you want to learn. But if you want to buy stocks, you just buy them on a brokerage. I like, I have a bunch of brokerages. I have Weeble. By the way, all the brokerages I use are in the link tree in my, let's see, here's my Robinhood account. Just buy stocks you love, and use like Meta, Google, McDonald's. Stay away from the risky micro caps. I don't own any crypto. I don't do options. I really just keep it simple. But this is my favorite brokerage right here for actual analysis. The most useful one, in my opinion, is this brokerage I'm on right now. If you want to get this app I'm on, it's in the link tree in my bio, first link there. But let's look at Bloom Energy. This is a $21 billion company, and the stock's at an all-time high. So first off, congrats if you own this stock because they have been blooming. So let's see. All the revenue comes from the U.S. They've been beating on analyst expectations. So check this out right here. The orange line is what the analysts expect. They're beating on revenue. They had a slight miss on net income this quarter, but they beat on EBITDA by double. That was good news. Revenue's up 20. What are the expectations? Oh, wow. They really narrowed. Looks like revenue is supposed to increase nicely. I wonder why there's so much momentum in this name. There must be some good news here. Maybe there's like a future project they're working on. I don't know. That's Bloom Energy for you. Maybe they're in nuclear. I don't know. A lot of the nuclear stocks have been on fire, like CEG, Constellation Energy. This one's at an all-time high. Pretty cool. How about TQQQ, the leverage ETFs? So here's the thing. These leverage ETFs, you never buy these without a plan to get out of them. You never buy and hold these for the long run. But hey, I guess right now has been a great time to own triple Qs because the Qs have been so bullish. Like, yeah, look at that. It went from 92 to 40. It cut in half basically, but then it went from 40 all the way up to 100. So you swing trade these. You especially want to stay away from the short ones like the SQQQ. Bro, these always trend to zero. I kid you not. Like literally just from a math point of view, these triple leverage short ETFs like mathematically always go to zero in reverse split for eternity, which is sad. But I just be careful with those. You always want to have a plan to get out of them. Something to do with lithium batteries. Oh, pretty cool. All right, so oh yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, very first link there. No way, dude. Hey, shout out to the homie Maddie on the YouTube live. He says, coffee is on me right now. 25 Ron is $5. Ron, Romanian LEI. Dude, Maddie, I hope you're having a great day, my friend. Hope you're having a great day. Thank you so much. Donnie says, I have Weeble and just tuned in. What app is this? Hey, I also have Weeble. Yeah, hey, actually, let me put that in the YouTube stream. Yeah, if you want to get this app I'm on again, I pasted it in the chat for the YouTube folks. Yeah, link tree in bio, very first link there. I also have Weeble linked up there. I do have Weeble. I also have Robinhood, but in my opinion, I had both of these before I got Mumu, and I don't mind having multiple brokerages. It's just an extra sheet of paper, no burden of having multiple brokerages, no tax complications. It's super easy. But this one is literally the most useful brokerage I've ever seen. I keep my idle cash in here. It's the lowest fee brokerage. I have $1,000 cash earns daily interest. So yeah. Anyway, link tree in bio, first link if you want to get it. If with my affiliate link, you can just type it into Google though. Just a broker called Mumu. So let's see here. Favorite medical stock or ETF? Yo, favorite medical stock of all time is HCA. Like actual safest, never sell medical stock with 30% market share for like these specialty surgeons, like or I looked at their investor presentation a while back. Actually, the best part about this company, you won't believe this. You won't believe this. You ready? Check this out. If we go to the net income right here, the net income is up by 12% year over year. So the net income is up by 12, but the net income per share is up by 23. I kid you not. This company buys back on average 5 to 10% of the entire company a year. Check this out. These are the stock buybacks they're doing. They're spending 2.5 or 2 to 2.5 billion on share buybacks every quarter just for eternity. This is like the most shareholder friendly company. So look, they spend 2.5 billion on share buybacks. The dividend only cost 180 million. Look, dude, the cost of the dividend went down. Whenever you buy back your own shares, they don't have to pay dividends to those shares anymore. So the cost of the dividend went down because of all the share buybacks. This stock is never going to go down. Oh, well, hey, not financial advice here. I'm not an expert, but this right here is the best healthcare stock of all time. Safest, yeah. Is Mumu also for international? Yeah, it is. It's for, you can also get this app in Canada. There's some countries it doesn't. I don't know if it works I don't think you can get this app in the EU, but yeah. Is MU too expensive to start a position? Let's go check out Micron. I love Micron. So this is one of the cheaper plays. Honestly, I don't think it's too expensive, but I wouldn't be jumping up and down because they're historically like, you still got to be careful because look at the PE on the top left. They're trading at 24 times net income. The industry average is a 47. Like they're trading tremendously lower than the industry average, and they're just as growthy, really. Like if you look at the revenue, but it's going to slow down. But the revenue's up 46% after it grew 93. Like these growth rates are insane. So revenue's up 46. And the net income is up 260%. That's insane, the margin expansion here. Now a 29% net margin. It's, never been higher than that. Look at that. It was even negative. So, I mean, and this wasn't propped up on some one-time adjustment either. Like that was real money they made. So the future looks pretty bright. Oh, and look at that. The analysts are expecting the net income to just continue to climb up higher and higher. Man, dude, Micron is not like, if you wanted Micron as like 5% of your portfolio, would I make it 5% today? No, but would I make it 1% today? Probably, because like it's that quality. Like it's quality. Yeah, hey Stefan. Sorry, people keep asking. Hey, I appreciate everyone being here. Yeah, again, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on. It's called a brokerage. But yeah. Let's see here. Tommy, dude, hey, thanks for following me on Mumu. What's best low cost dividend growth stock right now? Dude, it might be HCA. Dude, speaking of HCA right there, when we were talking about this healthcare stock that not only buys back 10% of all the shares a quarter, but you also get a growing dividend. I get the yield's low here at 0.64, but dude, I might actually, like low key, I might sell out of DocuSign. I might sell all my DocuSign and buy HCA. Let me just do this for me real quick. HCA. Dude, has anyone seen the news with Netflix? Dude, I think Netflix is gonna get hurt. But anyway, let's go back over here. What was that healthcare stock? Yeah, that was HCA. Why not? Hey, what up, Glovebox? He says, why not deep dive out of the money covered calls in your long holdings? Well, hey, I am a fan of covered calls, but on my kind of stocks, these are the kind of stocks that your call will get called on, and it's not worth getting that passive income on. Like I never, especially with some of these other names, I never expected these stocks to go up as much as they have, especially in this bull market. The market just hit an all-time high on Friday. Selling calls really hasn't been the move before today. I don't think I own any stock where I have 100 shares of. I don't think I own 100 shares of any stock in any of my portfolios. So that's another reason I just don't have 100 shares. All right, let's keep going here. ESLOY. Dude, this is the company. This is who owns Ray-Bans. And hey, X-Tick Physic. No way. Thanks for the rose. I really appreciate that. If you got a stock you want me to look at, let me know. And let's see, in Caden, if you got a stock you want me to look at too, let me know. Thanks again for the roses there. So here's ES. And hey, shout out to Maddie again, dude. Maddie with the 25 Romanian LEI currency. Dude, thanks so much. So anyway, here's ESLOY. It's a company that owns Ray-Bans and Oakley, and Meta has a huge partnership with them with their brands. And also, Meta just took a stake into the stock. So I technically own a slight portion of this company. Meta owns about 3% of this company, which is pretty impressive when you consider the entire company's worth 152 billion. Meta owns like $4 to $5 billion worth of this stock, and it goes under Meta's ticker. So honestly, they're making good money. For the full year 2024, this is in Europe. So we're going to convert their currency. They're a European company. You might have to pay an ADR fee, but we'll convert their currency to USD. These net incomes look great. 1 to 2.5 billion of net income a year. So pretty cool. Yeah, net margin. Yeah, so they have double-digit margins. Nice. And do you get a dividend here? And you get a 1.4% yield. I like them with the Meta partnership. And those. Did anyone see the new Meta Ray-Bans? Like, those are pretty cool. All right. So, can you show what dividends you hold? Yeah. So if I go over here, this is my dividend only portfolio at the top. And I only own dividend stocks in here. Most of these are like dividend growth companies. Like, some people make fun of me. They're like, hey, dude, Meta, Google, these aren't real dividend type stocks, but, they still pay a dividend nonetheless. And these are all the dividend stocks that I own in here. My largest holdings are at the top. CEG is my largest one. That's the nuclear play. Then McDonald's, everyone knows. United Rentals, you rent stuff from them. Google, that's Android, YouTube, Carlisle Roofing Company, and then Meta. So yeah. And then I own some dividend growth stocks in here as well. Like Comfort Systems pays a dividend. Powell pays a dividend. Coca-Cola pays a dividend. Amphenol pays a dividend. So yeah. And really low yields. My kind of stocks are companies that have very low yields, but also very low payout ratio, so it doesn't suffocate them. Like UPS has a nice yield, but the payout ratio is over 100% and it's not sustainable. And hey, no way, Xphysic, yo, with the hand heart. Thanks so much for that gift there. I really do appreciate that. Thanks so much. Slow down a little bit. It's Saturday. Hey, yo, sorry about that. I need to chill out all the Kool-Aid. Okay, so Michael, you know what? Speaking of UPS, wait, should you look at DAR? Let's look at DAR right here, and then we'll look at UPS. I think UPS does have an unsustainable dividend yield, sadly. Hey, what up, Leet? Someone says, bro, I'm down 9K. Can you check out? Oh, I can't cover Anshu. I cannot cover DKNG because of the industry. Last time I covered them, they took down my YouTube stream. Do you day trade using the Mumu desktop version? Actually, I don't really. I don't day trade. I like this portfolio specifically. I just buy and never sell stuff. Oops. But it is cool. Yeah, this app I'm on right now, there is a desktop version. Yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio, first link there. But here's DAR, Darling Industries. Unfortunately, this stock has not done well since 2021. Let's see, no dividend over here. Feed ingredients. So this must be an agricultural commodity company, food ingredients. So yeah, they sell commodities, so they must trade at a low multiple. Well, a high multiple. They trade at 48 times net income. Let's see what happened there. So, that's because the net income went negative. Was that real? So no, it wasn't real. That's interesting. Well, it was real, but it was kind of propped up on some one-time adjustment. Look at this. They lost 23 mil, but in operating profit, they really made money. So I can see why this company hasn't done too well. Look at that huge decline. No. So the revenue's up 1.8%, but that's after it fell 17% and after falling 7%. So I can totally see why this one's been struggling. And at least it's a tough one. At least they are making money every quarter, but there are some weird gap tricks. I'd be careful. What is a multiple? Oh yeah, that's like if a company trades at a 20x multiple, that means they trade it, that market cap, what you're paying for the whole company, they're trading at 20 times their yearly net income. And hey, Tommy won on the YouTube super chat. I really do appreciate you, Tommy. Thanks so much. He said, do Coca-Cola and HOOW. Yeah, wait, there was another. You know what? We won't look at UPS because that one I wouldn't recommend. You know what? Thoughts on UPS? Don't buy them. Dividends unsustainable. But you know what? For this next stock, you know who's going to like this message of Coca-Cola? That'll be the homie Warren Buffett. So Warren Buffett does own them. And we'll look at HOOW as well. Hold on here. I might have to... there we go. Okay. So basically, if we go to the Buffett portfolio right here, one of the stocks that Warren Buffett owns is Coca-Cola. It's 8.6% of his entire portfolio. It's been one of his better dividend growth performers. Because check this out right here. If you look at the yield right now, if you buy Coca-Cola right now, you get a safe 3% dividend yield. And look, they just raise their dividend every year very slightly, but that's really nice. That helps out in an inflationary environment when they slowly raise their dividend every year. They're trading at 23 times PE, which means they're trading at 23 times net income. The PE is just their net income multiple plus any buybacks or share dilution. But check this out. This is their after-tax net income. They're making 2 to 3 to 4 billion in net income a quarter. Since they have so much leftover money, that's why they're paying a dividend. And they're somewhat recession resilient. I love all their brands, Sprite, Coca-Cola, Powerade, Topo Chico, Fairlife chocolate milk, like Smart Water. They own Body Armor. I'm sure you know all the Coca-Cola brands, but I really do like them. And I actually own the Coca-Cola bottling company, ticker symbol COKE, a different one. They bottle for Coca-Cola, Dr. Pepper, Monster, and also Coca-Cola. Speaking of KO, check this out right here. Not only do they have a nice dividend, but if we go to Monster Beverage right here, does anyone know those Monster energy drinks? They're a publicly traded stock, and they've had, look at this Monster stock price appreciation. It's pretty insane, but the largest shareholder is actually Coca-Cola, and that's really helped out their stock as well. 21% of all the shares are owned by Coca-Cola, so that's pretty cool. 21% of the entire market cap. What's the name of this software you're on? Yo, this is a brokerage, by the way. It's where you buy stocks on. Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. And let's look at HOOW. Thanks again, Tommy. I can't believe it for the $4.99 super chat. So here's Round Hill Hood weekly pay. So this looks like a covered call ETF on Robinhood. Is that what this is? So yeah, what's the yield? It probably has an insane yield. Yeah, 21% dividend yield. I will say, selling calls on Robinhood stock makes sense right here. Oh, there's a 1% expense ratio, so that's a little tough. It makes sense selling calls on Robinhood since the stock is overvalued, but selling calls on it before today hasn't been the move. But so the inception time is actually pretty fortunate here. I'd still be really careful with that one. I'd honestly rather buy that than buy shares of Robinhood right now. Okay, so yeah, hey, try not to spam there. Oh, hold on here. All right, so yeah, Coca-Cola is pretty cool. And what up, Dynasty? Hey, what up, Dynasty? And what up, you know me? What's up? EL said RY stock. What is RY? QQQI. Hey, yeah, that's another covered call ETF. What's a good percentage? You mean like a yield percentage? Or like, this is the Royal Bank of Canada. So yeah, if you're looking for a Canadian bank, because, they have a really consolidated, sector of banks, unlike the US where we have a bunch of regional banks and stuff. I think they have like a few main banks. Yeah, you get a 3% dividend yield. We'll convert their currency from Canadian to USD just for fun. But yeah, wealth, I actually like that wealth management's their largest business. That's the high margin revenue where you get a percentage of managing assets. And yeah, this is their after-tax net income, 3 to 4 billion in net income a quarter. The stock's at an all-time high. I can totally see why. It's a cool Canadian stock. Hey, Leet, what's up, man? He says ACOPY. So this is the A2 Milk Company. Huh. I don't know what this is, but we'll convert the currency from NZD to USD. So 67% of all the revenue comes from China, then 16% Australia. So this is an international play for sure. I wonder, did they just sell milk or something? I don't know. But for the full year 2024, they made 117, or fiscal year 2025, they made 100 million of after-tax net income. Distribution and sale of milk and dairy products. So yeah, it looks like a milk play. Kind of cool. Let's see. Wait, Hey, thanks again, Rand, for the roses there. I appreciate that. He said HOND. Oh, so this company, I wish I could give you thoughts on them. I don't. This is one of those blank check holding companies that basically just acquires assets. So I think this company just bought something crypto related. I don't know, but this just like bought an asset. So I don't know what it is. So I just can't give you any thoughts on them, unfortunately. They don't really like report revenue either. Okay, so Palantir, dude, I love Palantir. Just too overvalued right here. Can you look started buying more DTSS again. Data C. Recent earnings look good. Well, hey, I would be careful with this one, Celery, just because of the fact that if we look in the top right, the total market cap is 16 million. So that's an extremely small market cap to trust. But let's check this out right here. Hey, thanks again, Angela, for the rose there. or she said in Joby Aviation, this I believe is a startup. Like they don't have any revenue, so but the momentum has been insane on this one. Yo, congrats if you've really owned this one. It's done really good. But would I buy it here? Here's the thing. When we go to the revenue right here, the revenue was 15,000 the most recent quarter. It was down 46%, down from 25,000. So this is a startup. They don't sell anything. They don't sell a product or a service. So they had 15,000 of revenue. And look at this. They're losing like 100 to 200 million in net income a quarter. They have been able to afford that because they've just been able to issue 300 million of shares, 350 million of shares. That's the right thing to do because they know the market cap's overvalued, but Toyota, it's kind of backed by Toyota Motor. This is the good news. 15% of all the shares are owned by Toyota Motor, but just the fact that this is literally you're paying for, so there's no revenue, 15,000 of revenue, and the whole entire company is worth 15.6 billion. You're paying, in my opinion, for so much future uncertainty. Like it's kind of like a Tesla. I just would be careful with that one with a lot of money. But if you've owned it before today, especially with the momentum in this environment, you're doing great. So it's not like all right. So Noah said, what app is this? Oh yeah, by the way, this is where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. It's a broker. So let's see. Silver is killing it. Yeah, dude. Actually, did you know Google, the stock, is worth more than all the silver and all the copper in the world combined? Like the market cap of the entire silver market and copper market combined, all of it in the world is smaller than Google. But anyway, here's Figma right here. This is like a app development software. One of my friends made an app in the App Store using Figma, which is pretty cool. And here's why I really like this company. They're really growthy. Again, they just IPO'd, so there's not too much data, but the data we do get is we can see that the revenue is up 40%. The previous quarter, it was up 46%. On this revenue, they also made net income. 30 mil, 45 million of after-tax net income. This was their IPO expense, but really good balance sheet as well. So actually Figma, I think, has pretty good fundamentals. Still, the 25 bill market cap is probably a little expensive, but I put them on the watch list. All right, so what up, Kai? He said CPS, dude. Let's check it out. Cooper Standard. So let's see what this is. This is a $600 million company, a very small market cap, but they've been doing pretty well the past couple months here. Let's see what they do, actually. So Sealing Systems, that revenue is down 0.1% year over year after falling 2.5%. And their fluid handling systems are down by 0.1%. So when we combine that together, the revenue this isn't too growthy of a business. Like revenue's down 0.3% after falling 2%. They're not net income positive because it's because of the interest expenses. That's tough. The operating profit is positive. That doesn't include tax and interest, and net income does. Yikes. I didn't see that bounce. Look at that. They have more liabilities than they have assets. I would be careful with this one, but there's some sort of good news that maybe I don't know. Maybe there's like some future contract or project they're working on, but the fundamentals don't look, I kind of want to see the growth come back for it to really justify more of an upside. Hey, Jeff said ASTS. Lucas, remind me to look at CPRT. I do own that one, I think. So here's ASTS Space Mobile. This is a space company. The next 2 months are crucial if you're a shareholder, because if we look at the revenue right now, this is what most people like. It's trash. It's $1 million a quarter, but guess what happens the next 2 quarters? This is why the next 2 months are crucial. They're going to basically convert from a revenue-less company to real revenue. Analysts are expecting the very next quarter it to go from 1 million in revenue to 24 million. And then the quarter after that, 32 million. Like the growth expected the next 2 quarters is insane. And that's kind of what the stock is kind of pricing in. Kind of like what Take-Two Interactive is pricing in from the GTA 6 thing. So I wouldn't buy them here, but the next 6 months are going to be very crucial. Hey, just for fun. No way, dude. With the 28 roses, the 28. Dude, thanks so much, just for fun. If you got a stock you want me to look at, let me know there. I got you. Do you think Google is still undervalued? Google's worth more than silver is crazy. Yeah. I learned, actually, the whole entire gold market, gold is the number 1 asset in the world. All the gold in the entire world is worth 24 trillion. Then there's Nvidia at 4.5 trillion. And then silver is worth under 2 trillion. And here's Google right here. Google is worth $3 trillion. The Google is literally has the influence of like the size of a country. Like so anyway, Google, I think if you have the intention like me to just buy and never sell Google, I think it's worth buying even today, even now. The PE is pretty fair. They're trading at 26 times net income. I'll go pretty quick with this one. But yeah, they own Android, they own YouTube, they have a huge Google Cloud business. They just acquired Wiz for 30 billion. They're in quantum chips, they own Waymo, ETF and one right here, Google Cloud and AI. They're a huge AI play. Google Gemini just took over ChatGPT. The cloud business is booming. That's really high margin for them. They're expanding margins and they're a buyback play. They're a dividend play. Google is so shareholder friendly because if we go to the dividend yield, you now get a dividend of 0.3% yield. At least it's something, because if we go to their net income right here, they literally make over 100 billion of annual net income a year. What is Google doing with 100 billion of annual revenue? Well, since they have so much leftover money, they're too big to really acquire a company from a regulation point of view. They just spend 15 billion a quarter on share buybacks. That's why the stock never goes down. Well, not exactly, but basically, Google literally spends 15 billion of their after-tax net income every quarter buying back their own stock. They spend $5 billion a month just buying Google shares. Like literally, when those shares don't exist, that gives you more ownership in the company, makes the EPS literally go up, makes the PE ratio go down. It gives you more ownership. I love Google. Sorry, I kind of ranted on them. I do own Google. I might be biased. I am biased. And Rich Millennial, hey, what up, dude? He said, what app is this? Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio. It's the very first link there. It's where you buy stocks on. It's my favorite broker. I also have, a lot of people like Robinhood too. I have all the apps. I'm not sure which one you're talking about, but I have all these apps linked in the link tree in my bio. I have Weeble too, but my favorite one for analysis is the one that we've been using right here. First, it's Mumu, link tree in bio, very first link there. So, oh yeah, hey Umar, I'll put it for the YouTube folks. It should be in the description of the YouTube stream. I've also put in the chat. I'm streaming on both YouTube and TikTok right now. So hey, what up, everyone? I appreciate everyone on the YouTube stream. I'm trying to build out my YouTube channel, so I appreciate y'all. If you'd hit the like button, it'd really help me out. By the way, I sell nothing. I have no course, book, private, WhatsApp, or Telegram, none of that stuff. So hey, what up, Sean? He said, oh, Professor Pumpkin, we'll get to that one. He said GIS. This is General Mills. I really love a lot of their brands. Like they own, I bought some Gushers today, and on it said General Mills. So General Mills owns Gushers. They own a bunch of, cereals. But check like Cinnamon Toast Crunch, Frosted Flakes. So check this out. 23% of the revenue is snacks. Like I love how diversified their revenue streams are. It's not all just like one thing here. Yeah, 17% of the revenue comes from their cereal, 14% convenient meals, 14% pet, 11% dough, baking ingredients. Like I love how diversified that they own. They own Pillsbury dough. But the one reason why, if you're looking at the stock, why is it being hurt so much? Well, check this out right here. If we look at the revenue is down 6.8% year over year. We kind of want to see the growth come back to the revenue. So revenue's down 6.8 and the net income is down by 17. They're still making good money. They're still making a couple, like basically 500 million plus in net income a quarter. I do like the dividend on them. They have like a 4 or 5% yield. So let's see here. 5.9. Any thoughts? I don't know what that is. Can you give me the ticker symbol and I'll probably check that out. How about evil BlackRock stock? Well, hey, a lot of people like they think BlackRock owns the world or whatever. They literally just like if you look at any stock, let's just pick a random one here. Google, since we were just on them, or it doesn't even matter. And you go to the largest shareholders, you'll usually see, oh, come on, Google. Let me go to GameStop or something. We'll go to GameStop. We look at the shareholders. If you look at it, a lot of the times, you'll see BlackRock. Look, BlackRock owns 7.88% of all the shares of GameStop. Well, that's actually not them. They just own it in their ETFs, which retail investors own. So whenever you put a money in a BlackRock ETF for one of their products, they go buy the asset for you. So they don't really own it. But check this out right here. They're an asset manager. 35% of the revenue comes from equity, fixed income, and then alternatives. This is their Bitcoin and Ethereum ETF revenue. I kid you not. That's why the past 3 quarters it spiked up, because that's when they released the Bitcoin one. It literally went up. The growth rates are insane year over year. 71%. 81, 63. So that's a cool business. You get a very sustainable yield on BlackRock. Check this out right here. 1.78% dividend yield, which is pretty cool. 28 PE. That's fair as well. And if we just go to the net income down here, they're making, good money. So let's see. Yeah, but dude, hold on. I might have to disconnect my phone real quick because sorry, my Wi-Fi is bugging today. By the way, if you want a default button, we stream every day. Yeah, look at this. They're making 1.6, 1.7 billion net income a quarter. Pretty cool. So yeah. Um So now, yeah, hey, yeah, full disclosure. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. And full disclosure, you're right, it's an affiliate link. I wish they liked it, but it's just an affiliate link. So they have a thing where if you go and deposit on this app $100, we'll both get like a fractional like share. We'll both get like a little free. And I have affiliate link for all the links up there as well. Full disclosure, if you sign up for Robinhood, if you sign up and deposit, we'll both get a $5 fractional share. If you sign up for Mumu, we'll get a little fractional share. We both will, and same for Weeble. So yeah, full disclosure, they are affiliate links. Yeah, if you want to get the apps I'm on, link tree in bio. This one I'm on right here is the first link. This is my favorite one to. Anyway, let's see. CPRT. Oh, wait, let's look at CSGP, and then we'll look at CPRT. So this is CoStar. I haven't heard of CoStar before, I don't think, right here. So this is a $35 billion company. Not too shabby. The stock's been flat for a year, though. Let's see if we can figure out what happened there. So, maybe because they're in the real estate industry, so multifamily homes. But wow, it's grown very nicely. It's up 10% after going 17, after going 23. The growth is actually really impressive on the multifamily. And then CoStar. What's CoStar? Let's see. Wow, actually the growth is very good here. It maybe just is like the residential housing market has been so slow. Like it's really hurt the home builders, Carlisle, the roofers, like a lot. But oh yeah, look at this net income right here. This might be why actually. So the revenue's growing nicely, like we saw. Top line's growing nicely. But they're having trouble with their margins. Look at that. They barely stayed net income positive this quarter. They actually lost money last quarter. But luckily, very good balance sheet. Wow. Is this the company that acquired Matterport? That's a different company, I think. CoStar. I don't remember. There was a company that acquired Matterport. It was like a real estate stock like that. Man, dude, I was saved when Matterport got acquired. I was down like 50% of my shares. Anyone remember that? Someone in the chat said, "Bro, you're a big tech shill." All right, man. All right. Have fun when your dollar devalues. Could have real money, gold and silver. Yeah, hey, gold and silver historically never outperform, but they are good assets to own. I like gold specifically a lot more than silver. Like, look at IAU right now. Gold has been great. Look at this. Gold is at an all-time high right now. But dude, big tech the past 10 years. If you own any of the Mag 7 the past 10 years, you're up like 1,000%. Like, all right, let's keep going here. But what up, Seahawk? All right, so ticker is 59, and then the letter 9. FIVN. Okay, yeah, that's the ticker symbol. Okay, FIVN. What is this? Unfortunately, the stock is at an all-time low right now. Oh, hey, we'll look at Pinterest too. What you're suggesting for investing in stocks, long-term things? Yeah, hey, buy the S&P 500. Buy stocks you know and love. Food is about to go crazy this week. I hope so too, Josh. I love food too. So yeah, 5.9's at an all-time low. Usually the financials explain it. So let's go look at their fundamentals right here. So actually, this looks good. Revenue's up 12 after going 13. After going 16. So what the heck? The revenue's growing very nicely. It looks like they're just now getting net income positive. That's great news. Deleveraging, cash from financing. What? Yeah, they just paid off like 400 million worth of debt. They sold. Cash from investing. Why was that? So I think they might have sold off an asset or something to be able to do that. I don't know. I don't know why the stock's at all-time lows. Maybe there's something I don't know there, but I'd be careful. Just because the market cap is so small, I don't really know much about them. But honestly, it's not. I actually like their financials. It's really not too shabby. So CPRT, let's see what this is right here. Hey, what up, German? Good to see you, man. And Crypto said Zoom stock. Hey, Zoom is one of my biggest losers. Oh, wait, we just looked at Copart. Yeah, I think that's that real estate company. Wait, Copart. Oh, wait, no, this is a different company. All right, let's see right here. Market, 81% of it comes from the U.S., revenue's up 5% year over year. And yeah, look at the net income. Actually, this looks great right here. They're easily making 400 million of basically after-tax net income a quarter. Look at that balance sheet, dude. This is the balance sheet you want to see. That's a fortress balance sheet, man. They literally have $4.8 billion of cash, $4.8 billion of cash and no debt on the books. That gives them, what's the market cap? Literally 10% of the entire market cap you're paying is just their cash in hand. So you can subtract 10% from their PE for an X cash multiple. We could even go back and add their inventories if we want and subtract even more. But then you're just buying a business that makes $400 million in net income a quarter. It's going single digits, 5%, 7%. But this margin expansion has been impressive. Actually, I do like that one. So Crypto said Zoom. Hey, check this out right here. And remind me to get to Pinterest. I do want to get to Pinterest after this. Sorry, there's so many stocks and I want to get to all of them. I do apologize. Sorry if I don't get to your stock. I try to be respectful and only spend like a minute on each one. But look at Zoom right here. We are down bad on Zoom. Why didn't I sell out of it? Just because it's too cheap to sell. Like if you look at it, I'll be so quick. If you look in the top right, the whole company is worth $24 billion. So, the whole entire company is worth $24 billion. And if we go to their balance sheet right here, they have $7.8 billion of cash. Literally 30 to 40% of their market cap is just their cash on hand. And then on top of that, here's what you're buying. You're buying a company that's making 300 to 400 million of after-tax net income a quarter, and it's growing. Like, I love the net income. So that's why I'm not selling Zoom, but this is a company with no moat, unfortunately. Like Microsoft Teams, Google, like Call, like, oh, wow, their enterprise customers actually went down year over year. Customer metrics, like this isn't one that I would be actively looking to buy, but I just can't sell out of it. You know what I mean? Just kind of too cheap. I've sold a little bit. Biggest bubble in history. Dollar lost 24% of the value. The dollar's lost like 40% of its value in like 10 years, or maybe a little longer than that, 15. Let's see. Hey, what up, Plasma? He says, what do you think ALB will have a turnaround? What is ALB? Albemarle. So I think this might be another commodity company. Hey, how's AI after the news with that guy? Don't know his name. I don't know what that news you're talking about is. How's AI after the news with that guy? I don't know. But anyway, here's Albemarle right here. Let's see what this stock is. So, energy storage. Okay, so that's actually on a massive decline. I mean, look at those declines in the middle here. So revenue's down 14 after falling 50. So specialties, that one's up 5% comparing from a whole though. I can see why this stock hasn't done too well. It's on a nice recovery right now, but this is not great. Yeah, revenue's down 7 after it fell 39. And they're just bare. Oh, actually, the profits are. So it's definitely better than what it used to be. They used to lose a bunch of money every quarter. Now they're actually making some good money now. So that's the good news. Do you get a yield here? 1.84% dividend yield. It is tough to afford that. Good thing they're finally making net income again. So we kind of want to see that trend stay positive of them making money. So yeah, I will say a lot of stocks right now are very bubbly. Like I would not, like if I go to my portfolio right here, I wouldn't pay near any of these current valuations. I wouldn't buy Hood, SoFi, well, maybe Reddit, AMD, really, Super Micro. Like there's so many stocks that I own that I wouldn't buy because the valuations are so, stretched right now. AI. Wait, are you talking about ticker symbol AI? Is that, dude, that ticker symbol always confused me. I never know if someone's talking about AI or want me to look at ticker symbol AI, which I think might be some subscription model company. Wait, there was a stock I wanted to look at that I never got to. Oh, pins. Hey, it's pins. Okay, that's actually in my zero debt watch list. You know what? I have a watch list over here, the hidden gem watch list. But then I have the zero debt watch list where every stock in here has no debt, like Reddit, Duolingo, DocuSign, Yelp, all have no debt. And then Pinterest right here. Pinterest is another company with no debt at all. But this one just hasn't been doing too well. We've all probably heard of Pinterest before. Let's see what their user metrics are. I'm curious about that. So yeah, we do get this on this app, which is cool. They have 578 million monthly active users, up from 522. So actually their monthly active users grew very nicely year over year. And if you look at this net income right here, it says they made 1.85 billion. They didn't actually. You always look at the operating profit. They actually made 261 million. It's always Q4, around that Christmas time is when they make their big bulk of their money, because all the other quarters they struggle. If you look at this quarter, it says they made 38 million in net income this quarter, but they lost 4 million of operating profit. How did that happen? What's the difference of operating profit versus net income? Operating profit is the actual business operations without interest and taxes. So if you're wondering, operating profit was negative, but net income is positive, that's because they literally made so much interest on their cash, because that's not included in operating profit. Because if we go to their income statement right here and go to their, let's see, they literally made an interest, pure interest, had to do no work for this. They just, that's what's so cool about this high interest rate environment. You can just milk high rates, but they made 28 million of basically free money, and that's added straight to the net income, helps out the bottom line. Anyway, what stock is this? That was Reddit. No, that was Pinterest. I don't know if that one will really outperform. They're a bit of a slow grower. Gold is like literal like stardust or something, I've heard, or I don't know. Hey, Ruben, what up, dude? He said Sony, the Sony PlayStation. They're in so many industries. This is actually a Japan company. So I think you pay an ADR just because this is they're headquartered in Japan, but check out the yield and payout ratio. You get a 0.5% yield, and then the payout ratio is only a 10%. Oh, hey, remind me to look at ticker symbol AI. C3, I think that's C3 AI. It's not really a great company from what I remember. Unit of key sale products, that's their, PlayStation units. They sold 2.5 million PlayStations this quarter, but they really make the money off the services. Like whenever you go buy something in the Sony PlayStation App Store or whatever, you pay like 30% more for the game because it's on Sony. And they get some music revenue, which is kind of cool. But yeah, check this out. Game and network services, that's their main business. It's like 7 to 10 billion of revenue a quarter. Then they're in entertainment technology, and then they're in music. That business is up 18% after going 9. So the music business is actually starting to pop off a little bit. We go to their just after-tax net income a quarter in USD. They're legit doing 1 to 2 to 2.5 billion of after-tax net income a quarter. So Sony's a nice just buy never sell stock. So I bought $1,500 of SoundHound AI. What up, Max Win? Hey, yeah, dude, SoundHound AI. I think if you're a shareholder of this stock, there's really one thing you want to watch for this company, and that's their subscription revenue, because it's a subscription model play. 75% of the entire company is their subscription service, and check out the growth here. I mean, literally a year ago, this was a nothing burger, 400, 300,000 a quarter. But now look at this growth. I mean, it's at a new record, up to 32 million this quarter. It's never been higher than that. So literally it's up from 3 million. That's insane. So they're finally making real revenue, and they're beating on expectations. Look at this. The orange line was 32 million. It's what the analysts expected. They just reported 42 million. And if we go to the net income, that's actually propped up. They actually lose a lot of money every quarter. So do be careful. They are losing a bunch of net income. But as long as they can keep up this growth, I think analysts will be happy. Yo, Caden, bro, the very last stock we just looked at was, PIN or PINS? This is the Invesco India ETF. Hey, so look at that. If you're looking for exposure to India, maybe you could buy this one. India, I don't think will outperform the US in the long run. This ETF, their basket of all the stocks there is actually lower than it was in 2017. So you bought this in 2017, you're actually down on your money. But if you want exposure to India, which is an economy I do like, here's an ETF. Maybe I would probably pick and choose some stocks instead of the ETF, but yeah. All right. Tommy said Main Street Capital. Yo, this is one of the few stocks that actually pay monthly. I actually own them in my Roth IRA. Let me show you that right here. I don't own much of them, like 12 shares, but I do own them in a Roth IRA because they pay a monthly dividend, and those dividends are tax-free in my Roth IRA. And they've had some decent stock price appreciation. We're up 6.69%. Not too shabby. But yeah, if you're looking for a company that pays you monthly, this is one I like. And they sometimes pay you twice in 1 month because they do special dividends because their payout ratio rules by the law. So yeah, 6.64% yield. You get decent. They're probably my favorite BDC. I've looked at Ares Capital, some of the Seven Realty. I've looked at a lot. They're not good. Like BIZD. Well, they're good, but Main Street Capital is the best one. Hey, what is Kodiak? Yeah, hey, if you got a stock you want to look at, let me know what the ticker symbol. I'm not sure what all that is. User 39 said OWL. Oh, this is Blue Owl. This is another BDC. So we just looked at Main Street Capital. This company does exactly what Main Street Capital does. And these are the kind of companies, remember, the last stock we just looked at had a 6.6% dividend yield. This one should have like an insane yield. I'll guess like 8%. Let's see. Or no, actually fair. 4.7% yield. So yeah, look at that. You get a really nice dividend with OWL. Again, let's see. So this is really nice. The revenue's up 27%. And the net income's down. You don't really look at net income for these. You kind of look at some other metrics. But this is another BDC, and again, these companies literally by law have to pay out 90% of their taxable income in the form of a dividend. But these don't really outperform in the long run. The S&P, Main Street Capital is like a weird exception. That one like has kept up. All right, so up from Jamaica, watching the numbers, give me a hint. Hey, what up, AI Read? You stream so often, I can't get all the good stocks. Hey, what up, Togus? If there's a stock that I think is amazing and great, most likely I own it. Or my newest position I actually just bought. And this company is more overvalued than Tesla. It's more overvalued than Palantir. I bought a share of Axon. This is a body cam company. They sell police stations body cams, and then also they pay for the subscription to keep the cloud and rewatch the videos. So that's a niche company that I bought one share of. Again, ridiculously overvalued. So that's a cool stock, though. Okay, so I subscribe to Mumu, but I see the analysis screens you have. How do you get there? Yo, Lux, I have a tutorial on how to use this app I'm on. It's on my YouTube channel. I'm not sure. If you're talking about the Pelosi tracker, you just go to the Discover tab and then you click on Insights at the top, and then that's where you can see all the portfolios, like the NVIDIA portfolio and all that. So yeah, I do have a tutorial on how to use this app also on my YouTube channel. And if you want to get this app I'm on, by the way, this is where you buy stocks on. It's a brokerage. It's in the link tree in my bio, the very first link there. So, all right. All right, let's see here. Someone said, dude, RGTI is a momentum. I don't know who's buying this stuff. And I'm really not trying to bag on anyone's stock here, but I don't know who's buying this junk. They've fallen for the marketing. And I call it junk, but look, it's at an all-time high. This is the environment to buy this kind of stock. But here's the thing. Look in the top right, the market cap. This is a $13 billion company. So the whole entire company is worth $13 billion. I've seen many $13 billion companies before, so I know what a $13 billion market cap stock should look like. And here's what you're buying. This is their revenue. This is RGTI's revenue. They literally did $1 million of revenue, 1.8 million of revenue, down 41%. So it's hard to really trust this name. This makes other stocks look like a steal of a deal. But yeah, this is your quantum momentum name with no fundamentals, basically revenue-less startup. The revenue was 1.8 million. Look at these year-over-year declines. It's tough. So yeah, and they lose 20 mil in net income a quarter. I certainly wouldn't be buying that one at all-time highs. What platform are you showing? Yeah, hey, Jose, I'm not sure which one you were talking about there. I have all these apps here. All the apps I'm using are in the link tree in my bio. I got Robinhood with Main Street Capital. But yeah, this one right here, again, link tree in bio, very first link there. All the apps I'm using in the link tree in my bio. This one right here is the first link. Robinhood's the second. Let's see. It's where you buy stocks on. They're brokerages. All right. Luck said OXY. You know who actually owns OXY? Is the homie Buffett. Speaking of Warren Buffett, let me actually use this feature. So look at this. We go down here, or we go to the top here. Buffett, has to make all his stocks publicly disclosed. And one of the stocks he owns, it's 4.17% of his portfolio, is OXY. And this stock kind of just went through some bad news because Berkshire Hathaway is literally buying their chemical business off Oxy for like $10 billion. Actually, let me go to the AI news down here if we can find it. Number 2 right here. Occidental Petroleum sells OxyChem to Berkshire Hathaway for $9.7 billion. Or $9.7 billion. That's going to help them deleverage, but that was such a great, there's a reason Buffett's buying it, because it's a good business. So that's why the stock fell after that. But they're a nice dividend play. I'd probably rather buy Chevron or Exxon. Hey, see you later, German. Have a great rest of your Saturday. Yo, I hope everyone's having a great Saturday, by the way. And if you want to hit the follow button, we stream every single day. I sell nothing. I have no course book, WhatsApp. app. Watch out for people impersonating me. I'll never follow you, DM you. I do have an affiliate link though. So if you wanted to get this app, full disclosure, like Julian said, what app is this? Yeah, if you want to get this app I'm on, I have an affiliate link, link tree in bio, first link there. So where if you get this app and deposit like $100, we'll both get like a fractional piece of we'll both get free shares of like stocks. It's kind of cool. So anyway, Phyllis said MARA. So this is one thing I would be careful with. So this is a Bitcoin mining company. What's the best dividend stock that you own? Best or that's such a hard question to answer. Or real quick, if I go over here to this portfolio again at the top here, this is my dividend only portfolio. So every stock in here pays a dividend. So best performing dividend stock in this portfolio would be Constellation Energy. That's this is the best nuclear play in the whole stock market. They literally own 30% of the entire US's nuclear reactors. Purest play out there. No close second. So here's Marathon. This is a company that just mines Bitcoin. And here's the thing. I've never seen a Bitcoin mining company outperform Bitcoin. You know what? Should we just do this for fun real quick? Let me go versus player. What are all the names out there? There's Hut 8, right? There's Hut 8. Let me actually add all these real quick. CLSK, CLSK. There's Clean Spark. We had Hive is, oh wait, that's the maximum. Anyway, they never actually outperform Bitcoin. All of them. So I just don't recommend those. I'd rather you buy Bitcoin. So let's see. I also have some great performing dividend stocks in here, like Comfort Systems. This one also has a very look at the yield, a 0.18% dividend yield, but it's had some crazy stock price appreciation. I need to remove these. What we found is these HVAC stocks like Comfort Systems actually moves with Bitcoin. It rhymes with it, which is pretty interesting. Can you do Sezzle? Hey, John, what up, dude? Yeah, hey, what up, Liam? Let's do SEZL right here. And Alex, we'll get to QFIN. Plug Power. Hey, what up, Citizen? Give me the ticker symbol. If you guys got any stocks you want to look at, give me the ticker symbol. I'll for sure get to it, especially the YouTube ones, chat. So, hey, Adrian, no 80. What's up, bro? Hood, dude. Hood's at nearly 150. Can y'all believe it? Robinhood at 150 share because I can't. So here's Sezzle. This is one of my favorite fintech growth stocks out there, and not financial advice. I'd put them on the watch list because they're so great, in my opinion. If we go to the revenue, this is insane. The revenue's up 76% after it grew 60, after it grew 30. The revenue hits a new record every year, every quarter. And it's not like they're just making revenue. Look, they did 98 million in revenue. So out of that 98 million in revenue, legit 27 million of it was after tax net income. It says the net income was down year over year. They had a one-time adjustment this one quarter. So you really look at the operating profit. So the real profits were actually up 116% year over year. Again, ignore this 53% quarter, but they literally have 25 to 35% net margins. This is a good business in my opinion. Look at the gross margin expansion. Their gross margin went from 58 to 74. Oh my goodness. I love Sezzle. I'd put them on the watch. It's not financial advice. Hey, what's up, man? Hey, you speak like a YouTube video. Yo, this is live. By the way, if you want to support me, best way to support me is watch the stream from YouTube. I'm streaming on YouTube, or just subscribe to my channel. It's called Nathan Robert. My YouTube channel is also in the link tree in my bio. But if you missed anything, sometimes I talk too fast, I apologize. You can replay it on the YouTube stream. It'll be there when it's ended. So yeah. So let's see right here. What is QFIN? What is this one? I don't know. And hey, what up, Alex? So QFIN Holdings or QFIN Technology? I found QFIN Technology. This is actually an ADR. This is a Chinese company. So you are paying a yearly fee. They're a $3.9 billion company. Oh yeah, so all the revenue comes from China. So do be aware that all the revenue comes from China. Let's see, net income. It looks good. The growth rates are there. For the full year 2024, they made 855 million of after-tax net income. I mean, that's good profits. What are their net margins? 33% net margins. Look at the orange line. That's the analyst expectations. They're beating on expectations, especially this quarter. Oh, expected to kind of fall off there. Anyway, they are Chinese. You're paying that ADR fee, so they can never kind of trade at a high multiple, which sucks. But the financials are pretty good. Can anyone see my comments? Yeah, Joel, I can see your comments. What's up, dude? Sorry. If you got a stock you want to look at, let me know. BTCI, is that Neos High Bitcoin? So yeah, this is just a Bitcoin covered call ETF, This one is literally flat since November 2024, and Bitcoin is up significantly since 2024. This is because it sells calls on Bitcoin. If we go to the dividend yield, that's how they have such a high yield. And hey, Tingrika, thanks for the rose there. I appreciate that. Yeah, check that out. You get a 26% dividend yield. It should that yield will go down, over time, but that's to you buy that to maximize your dividend income. All right, so I've never bought stocks before, so give me some picks. I not financial advice, of course, not personalized advice. Just invest in what you know and what you use. So like, and I kind of follow that. I'm not just saying that I actually do that. So I own Meta because Meta Ray Bans. If you're on Facebook or Instagram, Threads, Google, that's YouTube. You like YouTube? Why not buy YouTube stock? McDonald's, you like eating there? I do. So I get McDonald's stock. McDonald's is really a real estate royalty company that's recession proof. Constellation Energy, our literal utility bills through Constellation Energy, our natural gas bills. So I like Coca-Cola, so we buy Coca-Cola stock. I have an Amazon Prime subscription, so buy my Amazon. Just invest in what you know. Look at what the S&P 500 owns. What's the best dividends to buy now? One of my favorite higher yielding plays is one I actually recently picked up in my Roth IRA. Is IRM, Iron Mountain. They're a REIT, a real estate investment trust, and I'm up 6.7%. But check this out: this company has a 3% dividend. I love that 3% yield. 95% of the S&P 500 are customers. And they have a safe dividend rule where they'll never let their dividend payout ratio get out of the mid 60s. So safe dividend payout ratio. I love Iron Mountain. That's a data center REIT. All right. So Lawrence said, "Oh, QUBT. Yeah, this is another. These you got to be careful with. This stock is literally just called quantum computing, so they're gonna follow all the momentum. But this is a startup. Again, it's hard to trust these, in my opinion. I'm just gonna show you the numbers. Always draw your own conclusion. But like the revenue was $60,000. It was down 66%. So the revenue was 60,000 in the whole. This is a $4.6 billion company with no revenue. Uh, Losing 10 mil a quarter, like it's just tough. It's just pure momentum. This is a pure momentum play. You swing trade this. You want to have a plan to get out. Would I just buy and hold shares forever? Certainly not. Yeah, that one just looked too risky to trust. So yeah, monthly dividends. I'd like Main Street Capital. Is this pre-recorded? Yes, Gray. This is pre-recorded. You can tell by the time at the top left. I'm just okay. VOO and chill. I agree there, Looney. Just buy the S&P 500 and never sell. Sometimes you talk so fast you sound like a speed rapper. Okay, so IREN, please. Yeah, let's do Iris Energy. This is actually a data center play, kind of like a core weave. It's like a smaller core weave with great fundamentals. And hey, Todd, he said, "Sub bro, I picked up some Uber." We got to look at Uber after this because that's a phenomenal stock. I think you just want to buy and never sell. I think that was a great move. We'll check out them after this. But here's IREN, Iris Energy. They're at an all-time high. So if you ever look at a stock and you're wondering why are they at an all-time high, usually the financials explain it, or it explains why a stock is at an all-time low, like Lucid or something, or like a Plug Power. But check this out: the growing fundamentals justify the insane stock price appreciation. The revenue is up 230% after it grew 100%. Like the growth is insane on the revenue, and not just revenue, but after-tax net income. Nearly 100 mil in net income this quarter, 24 mil, 20 mil. So they're finally making consistent money. People are really starting to take them serious. They have tremendous growth. Would I buy them at all-time highs? No, I wouldn't. But I can see why they're at all-time highs. What happens is, hey, by the way, this is where you buy stocks on. It's a brokerage. If you want to get it, it's in the link tree in my bio, the very first link there. So let's look at Uber right here. Uber is one of my favorite stocks in the market. I mean, even though it looks expensive because it's close to an all-time high. If you have the intention like me to just never sell, it's worth buying. If I wanted this as 5% of my portfolio, I wouldn't make it 5% today. I would make it like 1% today though, because they are that great. They are that high quality. But check this out right here. We can see their monthly active consumers, not just monthly active users, but monthly active consumers. So the metric you really want to look at, it's at 180 this quarter, 180 million, up from 156 million the same time last year. So that's a good growth number. This is They have Uber Eats, which is their delivery business. That's 33% of the revenue. The delivery revenue's up 25, at a record. So delivery business is at a record, still growing after COVID, which is insane. Same with the mobility revenue, the share ride. Like, it's also at a record. It's insane. And they're not just growing top line, but bottom line. If we look at the FCF, which has their free cash flow, the growth rates are insane. Basically making $2 billion plus of free cash flow every quarter, and not just free cash flow, but also after-tax net income. They're making easily over $1 billion in net income a quarter. They didn't actually make $6.9 billion this one quarter, so the PE they made like $1 billion, but the PE is a little bit inflated low. It is a little higher. It says the current PE is 16. I wish that was true. They're really trading at around 22 times net income. Probably like 25. And that's pretty fair. Uber had 25 times net income for a software name that they don't own any cars, but they collect a high margin fee every time you want some food or something. Pretty cool. Hey, what up, Boof Dingle? What up, dude? ULTY, every Thursday you get paid. Here's the thing. With these title trust yield max, these are the worser ones. The title trust and the yield max ones are the worser ones because look, this literally was created in 2024. It was $20. It just hit an all-time low. I mean, it's at $5 today. With these, these don't outperform the market. First off, these don't outperform at the S&P 500's 8% CAGR, and you're paying a literal 1.4% expense ratio fee. I cannot kid you not. If there was a 1.4% expense ratio on the S&P 500, people would you're not getting to the 8% yearly return, total return, and you're already losing by 1.7% expense ratio fees. You're basically buying this to maximize your dividend income. I wouldn't really recommend it. The dividend income trends down every year by double digits, especially with these more NAV return of capital covered call ETFs. So would I recommend this one? No, I wouldn't. But there are some better covered call ETFs out there. That's one of the worst. I'm not trying to bag on. It's at an all-time low, and I mean the numbers show it. Okay, so Logan said DLR, Digital Realty Trust. Hey, first off, I've looked at this one before. I fully analyzed it, read the investor presentation, listened to the earnings calls. I actually used to own them. I've owned that stock before. I traded it all for Iron Mountain, IRM, the fundamentally, in almost every metric, every way, better company. Iron Mountain they're another data center REIT, and I'm only up 6.7%. They have but this is the better buy, the Digital Realty. But this one still, let's see what the yield is. A 2.77% yield. You actually get a slightly higher yield with that other name. Let's see, is the growth back? I actually haven't looked at this one in a while, so maybe I'm bagging on this one. So the revenue's up by 11, or wait, that's the free cash flow. So the revenue's up by 10%. That's great. The net income, yeah, they're making like 200. This one's still good. Honestly, Iron Mountain and Digital Realty should rhyme together. They should do good together. This I still like Digital Realty. I like Iron Mountain a little more. Hey, and Ariana, hey, no way. Thanks for all the gifts there. Heck yeah, let's see here. If you got a stock you want to look at, let me know. Thanks again for all the goats, the what-ups. I really do appreciate all that. Thanks so much. Oh, wait, let me scroll. ILMM. Wait, let's check it out. ILMN. Let's see here. So this is Illumina. Let's check it out right here. So this company is worth $15 billion. Let's see. Ooh, so unfortunately they're at, they're the same prices they were back in 2013. So you bought the stock in 2013. You're not doing too well, but let's see. What do they do again? Let me just double check this. So diagnostics and research. So a life science tool. So is this a gene splitting company? Or I don't know. Let's see. So this actually is not good. I can kind of understand why this stock hasn't been doing too well. They're not really growthy, especially when you add inflation to this number. The revenue's down 5% after it fell 5%, after it only grew 1%. So the revenue's just been on a nasty downtrend for a couple years. Luckily, if we go to the operating profit, though, they're still making around 150 to 180 million of after-tax net income a quarter. So that's the good news. You're still getting that. They're still making profits every quarter. Where's the revenue come from? So 52% US and all these other companies. I just want to see the growth come back to this company. I'd be careful. Does this app show insider information? Might get this app. Oh, hey, yeah, hey. If you go to the Discover tab right here, it's few stuff you get. You can see all the super investors portfolios, like the Nvidia portfolio. Nvidia is publicly traded. They own like CoreWeave. You can see the Nancy Pelosi tracker. She has to make all her trades public by SEC law. And you can see their exact holdings and weightings, and you can batch trade, follow them in. If you wanted to copy Buffett's portfolio or something, you could follow them in. Well, you'll notice with a lot of these super investors like Nancy Pelosi, her largest holding is Apple. So Nancy Pelosi's largest holding is Apple. If you go to Warren Buffett, his largest holding is Apple. If we go over here to the Trump portfolio, second largest holding is Apple after his own company. If we go to the Soros holdings, what you'll see is you gotta have some exposure to the Mag 7. Like you need to own like at least a little bit of the Mag 7. They acquired Grab. Actually, hey, yeah, Grab, 13% of it is owned by Uber. You're right. You sound like AI. What up, Joe T? So what about Adobe? Yeah, Dallas, let's do it. And Aiden, remind me to look at STX stock. Oh, and then Comcast. Comcast residential connectivity business is the reason Comcast is struggling is because that business is just going to decline single digits for the rest of the time. But here's Adobe right here. This one is one of the software names really being hurt by the AI thesis. Will we need Photoshop in 10 years? First off, I'm on an Adobe product every day. Like I'm on Photoshop, After Effects for my YouTube videos and stuff. But I know someone like made a great logo in ChatGPT, but for right now, the business is doing great. Like they're making so much money, easily 1.8 billion in net income a quarter. And what are they doing with all that net income? Since they don't pay a dividend and the stock's undervalued, they're buying back their own shares in a ridiculous amount, like an actual, like, pay attention to this amount. Like this is insane. Watch this. The net income was up by 5% year over year. So net income is up by 5%, but the net income per share is up by 11% because the share part of the ratio went down so much. It's insane. So, but that again, I think it's worth nibbling on. I always think we're always going to need the final touch for art and stuff. We can't just have AI fully rely on it. So I think we'll always need Photoshop, and I think this will slowly get unpriced as an AI loser to an AI winner. But I would nibble on this. I wouldn't make it a full-size position. Yeah, this is Adobe right here, Kevin. What is this an app? Yeah, hey, by the way, this is a brokerage where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio. It's the very first link there. It's my favorite app. I also have, I'm not sure which app you're talking about. I also have Robinhood, and I have a Weeble brokerage. I own stocks in all these apps, but my favorite one, the reason we're on this one is because this one is the most useful. I have all them linked up there. So Robinhood, this one that I'm on right here is the first link. Anyway, sorry. They're all affiliate links, full disclosure. Okay, so let's see. CMCSA. Let me get back to Comcast right here. So, and remind me, STX. We got to look at STX after this. So, Comcast, here's the tough part. Their 60% of their business is their residential connectivity cable business. And this is kind of just going to decline single digits for the rest of the time. So they, in my opinion, they really need to invest in their other businesses. And they kind of have been doing that. They have a media business, like your huge movie company. You've heard of like Despicable Me. This company owns that and all the other. So they're also in theme parks, Universal Studios, like where Legoland is and stuff. So anyway, Comcast is cool, but we kind of want to see the growth. Like look at the revenue. Revenue's up 2% year over year, like the lifeblood of the company, the sales. The revenue's up 2% year over year. That doesn't really beat inflation. So we kind of want to, and the net income fell by 9%, so the margins did dip a bit. But a lot of people like them for the safe, very sustainable 4% yield. But would I expect this company to really outperform the market in the long run with that cable business? It's tough. It's tough, yeah. Kind of reminds me of like a, what's that called that Buffett owns? Like the satellite, a Dish. Dude, like the Dish. Oh, wait, did it get taken private? Or Sirius XM. What's the SIR? Oh, here it is. SIRI. Yeah, dude, like Sirius XM or something. Like these satellite radio. Like they what sucks is, like, here, I'll show you. It just like slowly goes down by single digits every year for the rest of the time, which I'd be careful. Are you going to college for finance? I am. What's up, man? Yeah. By the way, I'm not an expert. I'm a college student. None of this is financial advice. I have no qualifications or anything like that. By the way, I sell nothing. I have no course book, WhatsApp. Watch out for people impersonating me. I'll never follow you or DM you or anything like that. So Caterpillar stock. What up, Hades? So he said Caterpillar. I really love this company. And honestly, hey, MMC Kane, dude, thanks so much for all the roses there. Yo, Plug Hydrogen. What do you think? Hey, give me the ticker symbol for Plug Hydrogen, and we'll check it out. Thanks again for all the roses there. So here's Caterpillar. This is a dividend growth company that has a lot of growth in the stock price and the dividend yield. Like this is a great stock to own. And I wouldn't even call you crazy for buying it, even right here, because check this out. You get a 1% plus dividend yield, even at all-time highs, and the dividend gets risen every year. And look at the multiple. This is the PE ratio, which stands for net income multiple. They literally are trading at a 25 PE. Like that's not NVIDIA. Like that's a pretty fair multiple. So I wouldn't be shocked to maybe see this one go to like 27, 28 PE before it really maxes out. You know, energy and transportation, construction industry needs their huge machinery, resource, mines need it. So yeah, they make good net income, 2 to 3 billion net income a quarter. I like Caterpillar. Oh, Plug is the ticker symbol. So y'all are gonna love my honest thoughts on this. Isn't good. So the momentum's been crazy though. The only reason I've looked into this, and this was what was so weird, the only reason Plug Power went up is because of an analyst raise, or verify that for me. The only reason the stock went up, or hey, actually maybe it's this right here. Plug Power delivers 10 megawatt electrolyzer array to someone in Portugal. That was yesterday. So maybe that was the news. I don't know. Plug Power expense stock offering program. So here's the thing. Here's why I couldn't, in good conscience, trust this company with a lot of money. Here's their electrolyzer sales. Fuel. Let's see. Fuel delivered to customers. That's up 15% year over year. Sales of here's the thing. Look at the market cap, and this is after its huge rally. So $4.4 billion company. So let's say you buy the whole company. You buy the whole company for $4.4 billion. Here's what you're buying, and this is the thing that scares me. They lost $230 million in net income this quarter, $200 million last quarter, $1.3 billion that quarter. That's 30% of the entire right now market cap. Like for just eternity, this company just burns through net income. Like they've never, ever, even since 2020. Since 2020, all they've done is basically lose around, if you average it out, like 200 to 300 million in net income a quarter since then. It's leveraging up their balance sheet. It's just tough. Like I like the growth here. Like what's the total sales? So sales are up to, sales are up 21% after falling 45%. So it's comparing from a whole here, but these net income losses are what scare me personally. Yeah, I like those electrolyzer sales. Like let's see, sales of electrolyzers. Look at that. 198% growth, but the net income losses are tough. But maybe they can dilute the shareholding. So I bought a lot of Comcast. They have bundles for cellular too. Oh, hey, cool, Johnny Rocket. Yo, I still would. Comcast is like a someone said, what app is this? Shelton, someone said Weeble. Hey, yeah, this is not Weeble. I do have Weeble, though. If you want to get Weeble, I like being fully transparent. Check this out. Here's my all-time return. We're only up 13% in here, from UiPath and stuff. I have Weeble linked. If you want to get any of these apps I'm on, they're all in the link tree in my bio. Weeble's the third link. This one right here I'm on right now is the first link. Thanks for your help. Yeah, no problem, Dallas. Let's see, TX. Don't forget about STX. Let's get to STX right here. The thing with Texas Instruments is Texas Instruments makes no net income. But if you go to their net income, you'll see, they make $1.5 billion in net income a quarter. Well, actually, their dividend costs more. It costs the exact same, so they're not actually retaining any money. Texas Instruments in a bit of a pickle, I think. That's one of my probably one of my least favorite semiconductor plays is Texas Instruments because of their dividend. I like Marvel more. Even Micron. MU looks great. So here is Seagate Technology. Look at that rally, man. That's an all-time high on this stock. So congrats if you own this one. You got to be up. And even at all-time highs, the stock still has an over 1% dividend, which is pretty cool. So they're in manufacturing and distribution of storage solutions. 50% of the revenue comes from the US. Do beware. And then another 41% of all the revenue comes from Singapore. Wow, this is good net income though. Like revenue's up 29% year over year. This is the real profit. The operating profit is what you look at. So the margins are expanding. So the revenue's up 29, operating profit or basically net income's up by 86. We're kind of comparing from a one-time adjustment right here. That's why it says negative 5%. But either way, they're making insane money, 400 to 500 million net income a quarter. I could see why this one's at all-time highs. And let me see what the analysts are expecting. Yeah, analysts are expecting they're beating on EPS, which is net income. STX is cool. I don't know if I'd buy them at all-time highs though. Amazon used to burn money. Yeah, that's why people like them. Like Amazon, they chose to not get net income positive. Like here's why people love Amazon. It's because they're so investing in the future. If we go to their cash from investing activities, if this is negative, this is how much they're spending on buying new companies, buying new assets, investing in the future. They just deploy money in the future. So yeah, that's why investors and like me, I'm okay with no dividend. I'm okay with no share buybacks on Amazon because instead of that, they're using that money to increase the business. Eli Lilly for a long-term hold. This is a great healthcare company, not financial advice, of course. Hey, remind me to look at FTAI, and ARR. Sorry if I don't get to all these. Someone said ticker symbol fun. I think that's Six Flags. So here's Eli Lilly. This is a healthcare stock you want to own for the long run. I don't know about right here, but they have all these prescriptions that I hear, like Mounjaro, for example. The growth is nuts. If you look in the middle here, the year-over-year growth rates, the revenue's up 112 after going 212 after going 6,000. Like it literally, they created this in 2022 with 16 million. It just hits a new record ever since, continues to grow. And now they have this new weight loss prescription. If you've heard of Ozempic, Wegovy, this is Eli Lilly's competitor to that. They made Zepbound. This is their new weight loss prescription. And they literally created this in 2023 or 2023 Q4. And it just continues to grow up 350% year over year to a new record. So they just create these prescriptions, they sell, and look how diversified that they are. They own all these different ones. Like let's click on a random one here. Jardiance. How's that doing? It's up 47% after going 20. So that's pretty cool. Anyway, they're just super, super profitable. And you get a nice near 0.75% dividend. Eli Lilly's a great never sell. Same with AbbVie. AbbVie is another great one. Plug revenue is up recent. Understand it's partner with Walmart. Wait, Walmart stock. Molson Coors is a good one. Hey, I do own Molson Coors. You know what? Walmart has probably better than McDonald's. The best like real estate portfolio in the world in terms of like these logistic hubs that are in like 10 miles of every one or the average US home. Let's check out Walmart right here. This is a never sell stock, and they also are on that franchise model. So whatever you spend money at any Walmart that's a franchise, a portion of it goes back to this parent company. But check this out right here. They make, pretty much 4 to 5, well, actually more than that. Pretty much 5 billion in net income every quarter. You get a near 1% dividend yield. This is a grocery store. Well, we've all heard of Walmart before. And I like that they have Sam's Club. It's like a competitor to Costco. You have to pay for a subscription to get into Sam's Club or Costco. And whether you go there or not, they're still collecting that subscription revenue. And you're buying stuff in bulk. So they have the lost leaders like the $1.50 hot dog, $5 rotisserie chicken. Walmart never sells stock. You want to have some exposure to grocery stores. And I own Sprouts Farmers Market. It's more of a healthy one. Walmart's a great one. Yeah, hey, I do own Molson. Check this out right here. If we look in this portfolio, we're actually down 8.8% on our position. Actually, if you include all the dividends we've received, we might only be down like 3%. But yeah, my favorite drink company out there, better than... I can't talk much about that industry, but yeah, it's my favorite drink stock. Ooh, DTish, what up, dude? Hey, what is this one? FDS stock. Let's check it out right here. So Fact Set Research. So unfortunately, something just happened. So there was some bad news. Oh, it's earnings. So let's go see what their earnings were. Yikes, that's not great. So they beat on revenue, they beat on EPS, and they missed on EBITDA. So I'm guessing they just gave bad guidance. Like that has to be what it is. Like we've seen that a lot recently with like the Trade Desk and Chipotle and Lululemon. They had some okay earnings, but they had terrible or not too great guidance. So the revenue's up 6% year over year. So single digit revenue growth, like every quarter this year, the revenue's been up 5 to 6%. So single digit, but they make good money. At least they're making like 150 mil in net income a quarter, and you get a 1.5% dividend yield here. But I'd be careful with that one. I'd have to see what news. Maybe it's oversold though. CTAS stock. Let's do CTAS. Cintas. Let's check it out. So this one has done very well. Oh yeah, hey, thank you, Revuvin. Thank you. We'll look at FTA after this. And then remember to look at ARR too. Sorry, I keep forgetting all these and I get distracted. So Uniform Rental Facility service. Well, it's growing. It's at a record. First aid safety services. That one's also look. That's what you want to see for a growth company if you're planning to just buy and never sell it. Like a good track record of just hitting their sales, just hitting a new record every year, every quarter. That one's also at a record. So you get a yield here, a near 1% dividend, which is pretty cool. Let's see what the revenue is. So revenue's up and decent. Yeah, they're pretty much making, if you round it up, pretty much 500 million of after-tax net income every quarter. So CTAS is pretty interesting. They might be a little overvalued right here, but FTAI, FTAI Aviation. So check this out. Actually, I do like this company. I remember looking at them. Thanks for reminding me. I apologize there, Reuven, for taking so long. So I'll give a little more detail on this one. This is a $17 billion company. We don't get news, but honestly, I think this is a stock that deserves to be at all-time highs from what I remember. Let's go see right here. So yeah, they're in aerospace products right here. Check out that growth. This is what justifies the stock being at all-time highs. It's the high growth. In 2021, the revenue was 23 million. Like, look in the middle here. We have 23 mil, 170, 450, now a billion. The growth it's unbelievable. So, and they're in the aerospace and defense industry. That's the industry you want to be in. And look at the analyst expectations. I can totally understand why they're at all-time highs. The orange lines with the analysts expect they're beating on revenue, the big beat on net income, big beat on EBITDA. Like, they're just beating on every metric, making a lot of net income every quarter. Sales are up 52 after growing 61, after going 144. Like, just this is a pure growth aerospace company. Pretty cool. I bought some this month. Oh, hey, now actually I also bought some TAP this month. German FRMI. Did you ever look into that? Let's look at this one. This is Furby. Oh yeah, this one. Oh, we couldn't look much into them because they just IPO'd, so we don't get too much history on this company. Just like if we go to their financials right here, it says no data, unfortunately, because they just IPO'd. And hey, Aaron, thanks again for all the roses, the Halloween pumpkin there. Let's check this out right here. Let's see. MKTX. And hey, remind me to look at ARR again. Market Essex. Oh, this is the company that just got removed from the S&P 500. So, it was either Robinhood or AppLovin replaced this company in the S&P 500. So that's not great news. This stock is now the same price that it was back in 2016. And hey, what up, Catherine? That's unfortunate. So, but they traded a fair multiple. Let's check that out. So they're trading at 28 times net income, end-to-end trading solutions. Maybe they're just being out innovated by other brokerages or something. Is this a brokerage? I don't know. It's an electronic trading platform. Oh, wait, where do they said Asia. Well, 69% US, UK. All right, well, let's see. Revenue's up 11% year over year. And yeah, this net income looks a little choppy. So yeah. Yeah, last quarter was rough. They just don't have great growth. Like last quarter, the revenue was negative year over year. It's not the end of the world though. Like they're still making net income every quarter. Honestly, it might be worth putting on the watch list to maybe like buy the dip on as like a buy the dip opportunity. Yo, X Tick, we literally, I saw when you first said Walmart. I can't believe it. We literally looked at Walmart as the stock right before you said that. So if you give me a little while, we will get back to Walmart. And thanks so much for the 22 roses. If you got another stock you want to look at, let me know. But Walmart's a great never sell grocery store. I own Kroger. Oh, you know what? Should we look at Kroger stock? Let me know if we want to look at Kroger. The grocery store that I own is actually SFM, Sprouts Farmers Market, and they've done terrible. Look at that. We're down 20% on Sprouts Farmers Market. So that's because they sell like healthy groceries. So check out Zim Dividend. Hey, what up, Jack? So this is a shipping logistics company that whenever this company has a rule that dividend investors love. Whenever they make any net income, 50% of that net income will be returned to the shareholder in a dividend. I kid you not. So that's why their dividend changes every quarter. Notice in the most recent quarter, the dividend, if you look at was 6 cents. The dividend was 6 cents. When last quarter it was 74, then $3, $2. So it's just half of, like if we look at their net income this quarter, yeah, the reason it was 6 cents of dividends is because they only made 20 million net income. What financial website are you using? Yo, hey, Rego Live. By the way, this is an app, or it's actually a brokerage where you buy stocks on. It's in the link tree in my bio, the very first link there. But yeah, this one really benefits from all the supply chain issues. And look, like in 2023, when everything normalized, when they were losing net income every quarter, they didn't pay dividends those quarters. So yeah, it's kind of like a dividend shipping play. I'll actually show you a cool one that is actually the same thing as them. They do the exact same thing. They're a shipping company. They just ship things in cargo crates, but this one, in my opinion, is more sustainable. And it has the same yield. If you look in the middle, they have no, actually, let me look at it over here for you. I don't like that app. GSL. This is the exact same thing, exact same industry. Literally just what I think is a better company. So check this out right here. Global Ship Lease. If we look at the dividend, you get a 6% dividend here. And look at that payout ratio. 17% payout ratio. And look, remember, we just saw Zim. Their net income was negative this quarter. Remember, we looked at like 2023, their net income was negative for a whole year. Look at this company. Again, so it's a little cyclical, but still, it's very consistent at 80 million to 100 million a quarter. And look at this. So look, they made 95 million in net income this quarter. Check this out. If we go to the cash flow statement, we can see how much exactly the dividend cost. That's what I like doing, showing you the numbers for yourself. You can draw your own conclusion. The dividend cost exactly $21 million in net income a quarter. Cost 21 mil. Well, they made 95 million of net income. By the way, I want to point this out, and I probably should have said this earlier. GSL is headquartered in the Marshall Islands and pays no taxes. So I actually discovered that yesterday. That's why I know so much about this stock. So when we go to this company's tax rate, it says 0% tax rate because they don't pay taxes. So anyway, Oh, wait. Oh, Caden, are you talking about Armor Residential REIT or American Rare Earths? I really hope you're not talking about Armor Residential REIT because this is like a textbook dividend trap. Yeah, like a lot of people see, 18% dividend yield. This is a mortgage REIT. This one is one of the worser ones. So yeah, like, if we go to, like, these are hard to, I don't understand these too much either, but if we just go to revenue, like sales, not net income, but revenue, like the revenue was negative. This is one of the worser REITs out there, the mortgage REITs, SCVN is a little better, but it's still risky with their, oh yeah, man, that one, I used to own that one. I just don't really like any of the mortgage REITs. I've looked at all of them. So yeah, sorry about that one, Caden. If you got another stock you're looking, let me know. Actually, here's a high yielding stock. I got you. MO. So this is a company that has a high yield and a sustainable one, but this won't outperform in the long run. It's had an incredible year. First off, it's had an incredible year, but this stock is the exact same price that it was back in 2016. So you bought it in 2016. You're break even on your position, but a lot of people like this one, and I like it for this reason because they have a real sustainable 6.2% dividend yield. Safe payout ratio, 62% payout ratio. So yeah, if you're looking for again, not too growthy, like look at the lifeblood of the lifeblood of the company, the sales, it's down 1% after falling 4%, after falling 4%, after falling 3%, after falling 2%. Bro, look at the years of decline of revenue. So again, I'm not expecting this to outperform the market in the long run, but look at what they have. They're pretty much making, I'm going to average it up here. They're making 2.5 billion of after-tax net income a quarter, and the dividend only cost 1.72 billion. So yeah, the numbers are right. They have around a 65% payout ratio, and since they have some leftover money, they're even buying back their own shares. Check this out at the very top. They're spending like 300 to 400 million of their own money just buying back their own shares every quarter. So that's what's pretty cool about MO. Thanks, bro. I come here every day just to hear you. Hey, thanks, Jack. I do appreciate that. Yo, by the way, if y'all want to hit the follow button, we stream every single day. I also downloaded Mumu. Hey, nice, Jack. Yeah, I love this app right here. Yeah, if anyone wants to get this app I'm on, if you want to use my affiliate link, it's in the link tree in my bio, the very first link there. Lowest fee brokerage. I keep my idle cash in here. If you look in the middle of my screen, I have $1,000 of cash and it earns you daily interest, which is cool. While you're waiting to look for something to buy, I like cash in this environment. With tech being pretty overvalued right now, it's tough to pay these premiums. I like chilling on cash. And someone said, "What REIT do you like?" I like IRM, Iron Mountain. That's the only REIT I own. Actually, they're in my. I have them in my Roth IRA right here. Ticker symbol IRM. This is a data center REIT, and they've been one of the better performing REITs out there. Like, this is one that you have a 3% dividend and you get real growth. I think it's better than some of the other REITs out there in terms of like better total in the future, looking better total performance. And you capture that AI with their data center business. They lease like the most high quality data centers. Like they triple net lease them. Congra and AE. Hey, what's the ticker symbol for that? I'll check it out for you. Check this out. Hey, what up, Johnny? What up, Johnny? Good to see you. Oh, Home Depot stock. This one should benefit as we go into a lower interest rate environment. People will spend more at Home Depot and Lowe's as they see it as an investment in their house, and it is a home improvement. So check this out. Right, the numbers don't look great right now when we go look at them because we're in a high rate environment. All the residential stuff has been struggling, but analysts know this, and that's why the stock has kind of been holding up pretty well. Analysts know. They expected this, so it's not like this is anything new. But anyway, what I love about Home Depot specifically is the dividend growth here. Like, you literally get a 2.3% yield, and they raise their dividend every year. 2021 it was $6. Now it's $9. So the growth of the dividend is insane. Like, look at this net income right here. This is the crazy part. They're literally making $3 to $4 billion of after-tax net income a quarter. So I really like Home Depot. Great dividend growth company. Good never sell stock. Roth IRA would take you how much? Roth IRA would tax you how? Roth IRA is tax free, by the way. I'm not sure what you mean there. Yeah, so that's what a lot of people like about a Roth IRA. It's this is my main taxable account right here. But in a Roth IRA, whenever I receive money from a REIT, because REITs pay non-qualified dividends, it's still tax-free. Like, if you double your money on a stock, you triple your money on a stock, whenever you go to sell it in a Roth IRA, it's completely tax-free. And it's so OP that they only let you put in $7K a year. So yeah. Is it free, or how do we use the software that you're showing us? Yeah, hey, Ragiello, if you want to get the software I'm on, it's in the link tree in my bio, the very first link there. It is free. It's where you buy stocks on. You don't have to deposit money and buy stocks in here. You can still this app. I also, if you go to the link tree in my bio, it's like the 5th or 8th link. I have a tutorial on how to use this app. Or if you just go to my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, I have tutorials on how to use this app, how I analyze companies using this app. It's my favorite brokerage out of all of them. I have Robinhood. I have a Robinhood account. I have a Weeble account. But Mumu is my favorite one to do analysis on because it's actually the most useful brokerage out there, I think. So let's see here. Again, it's an affiliate link, full disclosure. Thanks, buddy, for all your information. Hey, Brandon, what up, dude? Good to see you. Hope you're having a great Saturday, by the way. So let's see. But you still have to pay tax right now. So Top Hat said, ever heard of ICP stock? I actually have not heard of ICP. I type in ICP. I actually can't find that one. Eric said, can we look at Celsius, please? Dude, has anyone heard of Celsius before? It's like that energy drink company. They actually just acquired Alani. Like, the growth is finally back with Celsius. That's what investors were worried about back here. That's why the stock literally went from 90 or basically $100 all the way down to 22 because the growth was gone. Like, the Pepsi screwed them. Like, look at this. If we looked at the revenue right here, like, this is a pure growth company, and the growth, fell 30%. And if we go to the net income back here, they were making a bunch of net income every quarter. Then the net income, fell to 6 million, and then it went negative. So, but look what just happened. If we go to their balance sheet right here, the assets just spiked up because they just acquired Alani. Alani owns 8.7% of this whole company now. But that's a great asset to own. I love Alani. And that's what really explains how they grew so much. Revenue's up 84% year over year. And Pepsi just took a stake into Celsius. Pepsi owns like 6% of all the shares now and is going to help with their distribution. And for that, Pepsi gave Celsius Rockstar Energy. Does anyone remember Rockstar Energy? They kind of like lost to Monster Beverage, but Pepsi's giving that to Celsius. There's so much like future positive tailwinds for that company. I think I wouldn't be surprised to see them continue to go higher. But the risk to reward isn't great here though. So would I buy here with a meaningful size amount of money? No, but maybe I'd nibble on it. Okay, so AES and CE or CAG. What is? Let's check out AES right here. Let's see. AES. Does Mumu show the short interest? It does. So you know what? Let's see. We'll look up AES stock and I'll show you how to see the short interest. So whenever someone's shorting a company, you scroll down here at the very bottom and here's the short interest. So 4.67% of all the shares are being shorted here. That's actually a little high. So 6% of all or 5% of all the shares are being shorted here. Let's see what this is. This is a $10 billion company and the stock is the same price that it was back in 2018. Actually, it's the same price that it was back in 2013. That's not great. This must be some commodity. Let's see what they do. You get an insane dividend yield. Look at that. A 4.8% dividend yield. So pretty insane yield on AES. Let's see, they're in energy infrastructure and look at this. This might explain, usually if you look at the numbers, it kind of explains why the stock is doing so bad. Like this stock is the same price that it was back in 2013. Maybe because of this right here, their main business, energy infrastructure, it's down 11% after falling 11, after falling 12. Like that's not good. Let's see. What about this one though? Let's hope. Utility strategic. Hey, at least this one's up 6% year over year. And their renewables business is up 4% year over year. But when we combine all the businesses together and we just go to their total revenue, this explains it. Revenue's down 3. Add inflation to this as well. It's down like 6. So revenue's down 3 after falling 3, after falling 5. Oh, no way. Look at that. So we zoom out, the net income used to be pretty positive, but the past 2 quarters, it's been negative 150, negative 70. So I would be just careful with this name. It looks like the stock has been on a nice uptrend though. There was some sort of news right here that I don't know. Like there's no earnings this day. That wasn't earnings. So maybe there was some sort of news. Actually, I can go to the news tab and I don't know. But anyway, that's kind of cool. Tell us more about the short interest you mentioned. So that just means how much, like some high short interest stocks are like let's check out GameStop. This was one that y'all remember a long time ago. Basically, here's what happened. A long time. I'll keep it so simple, hopefully understandable. I probably am not even going to explain it well, but basically a bunch of people, you could tell by the short interest, a bunch of people are shorting GameStop right here. And so basically a bunch of retails here. Let's actually see what the short interest is today. So 15% of all GameStop shares are being shorted. So there's a huge short thesis on this company. And because it's GameStop, their revenue is kind of just going to decline. You're not buying them for the fundamentals of the revenue here. Like the revenue just, anyway, this is how much of the shares are being shorted. Like, actually, you want to know another, and that can also lead to a short squeeze. You see short squeezes all the time, like GameStop, another company that has a high short rate. I don't get scared out of short rates all the time. Like Powell Industries, this is my second largest holding in here. The short interest rate I think it's higher than GameStop. 15.6% of all the shares are being shorted at Powell Industries. But we've still done great on it. But do beware, I've read the short thesis for for Powell Industries. It didn't bother me. I read the short thesis for Perion Network. It didn't bother me, but the short thesis was they're going to lose their contract with Microsoft. And I knew that, I literally knew that. And then it happened and the stock fell 15% anyway. I'm like, we knew this was coming, but you just never know. Anyway, let's get back to y'all stocks here. Love Rockstar. Yeah, hey, Rockstar's cool. I haven't had one in a long time now. Hey, what up, Raw? He said IAU. That's just the literal commodity price of gold. So what's cool about this is it's a better way. Like if you're trading gold, like it's arguably better than physical gold because when you go buy gold, especially in smaller quantities of gold, you're getting bent over a little bit, but you're paying a spot price fee whenever you buy it and when you go to sell it. But with this ETF right here, you can sell it instantly when you want to. You can instantly capture it, instantly buy and sell with this is literally It uses the spot price of gold whenever you go to the pawn shop. This is literally the price of gold just in an ETF. It's run by BlackRock as well. So you get SIPC insurance for 250K. This ETF follows whatever the commodity of gold does. So it's literally just digital gold. Okay. Sometimes a lot of people are like, it defeats the purpose though. You want to own your gold because you own gold in case we go into like wartime. You know, I get that. But the SIPC insurance, it could collapse. Oh well. Most GameStop short interest is hedged position by convertible bond holders. Oh, hey, what up, Mark? Clem said, Baidu. Hey, this is a Chinese company. I think they're like a retailer. Wow. Look at that rally the past couple of days here. That's been pretty insane right here. Ooh, Lamar Advertising. Is that the stock you're talking about? Warren Buffett just bought some. Is that LAMR? Let me know. Can you check Kratos? Oh yeah, remind me to look at Kratos, man. That's a government contract play right now, like drone play too. Kratos has been doing insane, but it has like such an expensive multiple, like more than Tesla. But look at this right here. Here's Baidu. Again, these Chinese companies just don't outperform. Like Baidu is the same price that it was back in 2010. So you bought the stock in 2010, you're down on your position, but look at them. They've had a nice little rally the past couple months here. It's an ADR, so you're paying that yearly expense ratio fee. They're Chinese, so we're going to convert their currency from Chinese to USD. And let's see. All the revenue comes from China, so pure China play here. They're trading at 12 times net income. That seems pretty normal. Let's check this out. Active users. This is actually a really cool metric here. Right now, they have 735 million monthly active users, when the same time last year, they had 703. So actually, they had a nice little jump up in their monthly active users, but the revenue did fall 2% year over year. So the revenue's down 2%. The net income did climb by 30. What's the net margin on this? 22% net margins. I like the net income they're making. So that's great news. You know, oh, wait, hold on. That's really weird. This might be interest because if we go to their actual operating profit, actually that makes more sense. Revenue's down 2%, but the core operating profit's down 44. It's probably from all the interest they're making on their cash. Again, Chinese company, I'd be careful with that one, but they've done great the past couple months. There was some sort of good news. Like they didn't beat on earnings. There was some sort of good news that just happened. Hey, A. Fern said, I just want to say thanks for helping us all. Hey, thanks. I really do appreciate that. Again, I'm not an expert. None of this is financial advice. Always go do your own research. By the way, I sell nothing. Watch out for people impersonating me. I'll never follow you, DM you. I have no course book. I have no weird like private Telegram or WhatsApp. I have none of that. So anyway, here's KTOS Kratos. This is a government contract play. Let's see. So yeah, Kratos Government Solutions. It's growing nicely. The revenue's up 29. They just renegotiated like higher prices on their contracts, which is cool. So if we go to the revenue, it's a huge beat on what the analysts expected. Like the orange line is what the analysts expect. And look at that huge beat. They're expecting 305. They reported 350. And it's just almost like a beat almost by double just because it's so small, but they're expecting 1.4 of net income. Yeah, this is the tough part. The net income multiple is expensive, like crazy expensive, but the growth is there. I like them for the growth. They're a drone play, government play, but it's too expensive of a valuation, way too expensive. Any idea about crude? Hey, crude oil and some of these oil stocks are good to own in certain environments, and you get the nice dividend, but they don't outperform in the long run. Like just like ExxonMobil, for example, like this, or like, you know, it's good. These are good dividend stocks. You know who's going to approve this message? Let me actually pull this up right here. If we go to the Warren Buffett portfolio right here, this is one I'd recommend. You know, 6.2% of his portfolio is in Chevron, another 4% Oxy Petroleum. He owns a lot of oil stocks because oil stocks it's a great diversification asset. You don't want to have it as a large chunk of your portfolio, but it's good to diversify in because oil does good in inflation fears, currency fears, war fears, all that. And in the meantime, you get a great dividend. With Chevron, you know, the gas station, the oil, you get a 4.4% dividend yield. But again, these don't outperform in the long run, the tech-heavy S&P 500, but you get the diversification into. So I think it's always worth owning a little bit of oil stocks. I own a natural gas play, CEG, Constellation Energy, but that's really a nuclear play, but they have a small Baidu ETF. Kathy Wood made huge investment. Oh, really? That's actually pretty interesting. Brian said SPGP. This is the Invesco GARP ETF. I actually haven't heard of this one before. Let's check this out. Do they have an expense ratio? profile. The expense ratio is 0.3. That's not too terrible. But again, an ETF is just a basket of stocks, and these are all the stocks that it owns. So 3% NVIDIA. And then I love this actually. Arista Networks is the second largest holding. Supermicro, I do own Supermicro. I don't love them at this valuation though. Uber, I'm a perma bull on Uber stock. Delta Airlines, don't love the airlines. These never outperform really in the long run. Royal Caribbean's a good one. Monolithic Power's good. Yeah, like United Airlines. Like I don't know why there's some airlines in here and like hotel and resorts. I don't know if this will. It's an interesting ETF. I have no courses. A happy tear just dropped down my Hey, thanks, Jack. Um, I wonder if Nathan has a meme coin. No, actually, I don't own any crypto. I used to. I used to have some weird crypto. I own like 0x, land share. Dude, I own the most. Actually, I wonder if I can pull up my trust wallet. I was like, I literally haven't touched any crypto in like a year plus. Okay, thoughts? Luke said ICE stock. DKNG has dropped massive this week. I can't talk about what this company does, but we'll look at their financials. Every time I cover this stock, TikTok takes down the stream. So can't cover the industry, but by the way, best way to support me is just subscribe to my YouTube channel. I'm trying to build up my YouTube channel. I'm streaming on YouTube and TikTok. I got 85 viewers on TikTok and 40 on YouTube. I'm trying to build up my YouTube stream. So best way to support me, just watch the stream from YouTube. If you miss anything, you can replay it. Anyway, here's DKNG. Yeah, dang, they had a nasty little downtrend the past couple of days here. They had a nice volume spike on it too. Let's go figure out what happened because there was no earnings. Let's see. New competitors in sports market. Oh, you know who's now a direct competitor to this stock right here, DKNG? It'd be Robinhood. Like Robinhood would be a great competitor. Like Robinhood, man, that's actually crazy. I remember Vlad. I read a tweet by Vlad saying that it's like replacing the sports book. So anyway, revenue's up 30, and that's most of the revenue. That's 65% of the revenues. But anyway, I can't cover this industry much more the revenue's nice. Revenue growth is really good on DKNG, but the profits are not. They are struggling to get net income positive. So look, they made 150 mil this quarter, but lost. That's their one good quarter. But if you average it out here, they're on average losing money every quarter. So we want to see them get closer to consistent net income. I like this. They're just kind of being out innovated. I'd be careful with them. I don't love the industry either. A lot of certain states are hiking the taxes. I don't love them. Ooh, someone said MSTR. So this is strategy or MicroStrategy. This is a Bitcoin holding ETF. So basically, you trade this company off their net asset value of their Bitcoin, and they have an insane amount of Bitcoin. You won't believe this. What you do for this stock is you just look at their balance sheet, because the balance sheet, this is the crypto, the Bitcoin that they own. And how did they get so much assets? Well, it's like a crazy Ponzi, but it's not really, because it's worked out so far. And if this number is positive, that means they either issued debt or issued shares, and they don't have debt. So they literally issued this one quarter in 2024, they literally diluted you by $18 billion. All right. They diluted you by $18 billion. And with that $18 billion, they bought $18 billion worth of Bitcoin with it. And now that Bitcoin is up like 30 to 40%. So it's kind of worked so far, but it works great in a bull market. That all being said, I'd rather own Bitcoin. At the end of the day, I'd rather own Bitcoin over this, but basically this is just a Bitcoin holding company. All right, so check out MOM. What let me know, is this the Australian company, Moab? Let me know if you're talking about that one. Moved here from TikTok. Hey, Reuven, thanks so much, dude. Where'd you get all this knowledge from? Well, hey, first off, I'm not an expert, but I've just read. I've been investing since like I was 17. I've just looked at stocks. I've learned a lot by streaming. I've read books, articles, YouTube videos, but I'm definitely not an expert. I'm just a college student. So let's see, let's look at, L said PRCT. We'll look at PRCT and then we'll pull up EPD. I think that's Enterprise Products. That's an MLP, I believe. So this bio-robotics company is the same price that it was in 2021. So that hasn't been doing too well. But let's go see if we can figure out what happened here. Usually it's explained by the financials. So all the revenue, or 90% of it comes from the US, and the revenue is actually growing very nicely. Revenue's up 48 after going 62, after going 98, after going 96. Dude, they're on a streak. They're on a growth streak right now. And out of this 80 million of revenue, okay, so they're still losing money every quarter. So they're losing 20 mil in net income a quarter. What's the market cap? $2 billion. It's not the end of the world because they do have a decent balance sheet. They were able to issue 170 million of shares. So they have been diluting you a little bit. Honestly, they're worth looking into. I really love the growth there. They're worth looking into if you wanted a super, super small position. But yeah. What's your fave quick news app? Well, hey, I actually use this app for the news. You know, if you click right here, and then you click on news down here, they have like the actual latest, or you can read the headline ones too, but the exact minute by minute news as it comes out. And you can select it by watch list too, so it'll only show you news from your watch list and the earnings stuff. So anyway, kind of cool. I turned the notifications off though, but anyway, let's get back to this right here. Do you see Toast going back up? We want to really see the I do own Toast. This is your restaurant point of sales payment software company. They are struggling because all the restaurants are struggling right now. They're so prone to these restaurants because, and if we look at like your average restaurant, like let's go to Wendy's right here. Wendy's is done terrible. Wendy's is the same price that it was back in 2007. I mean, there may be a day and time where we never see a Wendy's again, or a lot of locations shut down. We go to like a Jack in the Box, dude. Jack in the Box is at an all-time low. They own Del Taco as well, and not just those, but like Chipotle. Even Chipotle, for example. I mean, well, on the daily specifically, but they're also a good chunk off their all-time high. So I want to see the sentiment kind of get better for restaurants. So wait, LAMR. You know who owns LAMR? That's actually the homie, or actually just bought it for the first time ever. So who just bought this stock for the first time ever is actually Buffett. So if we go to Warren Buffett, we click on new right here. One of his new stocks were United Healthcare. United Healthcare went to the moon after that. But another stock he bought was LAMR, Lamar Advertising. I used to own the stock and I actually regret selling out of them. They're a REIT. They're actually a billboard REIT with the largest market share. All the other billboard companies are pretty much going bankrupt, like CCO and what's the other one? Outfront Media. Lamar is the best billboard play out there. All the billboards are like grandfathered in. We're not really getting any new billboards. Check out the dividend. You get a 4.8% dividend that's completely sustainable. Completely sustainable. Yeah. 88% of the revenue comes from their billboard business. It's a bit of a slow grower, but it's a REIT. Kind of expect that. So yeah, you're mainly buying it for the dividend. Buffett just bought it too. Best billboard REIT out there for sure. I like them. Do you day trade? I actually don't really day trade. I mainly just like buy and hold great companies, between like sometimes I'll swing trade, like in this portfolio, I'll buy and sell it after a month or something, but mainly buy and never sell. Colgate Palm Olive is 52-week low. Check it out. What up, Hector? Is that, what's the ticker symbol? CL, right? Or maybe C. Oh yeah, here we go. Colgate. So yeah, this is your staple, toothpaste company. The stock hasn't done too well, same price that it was back in 2018. Let's see what they do though. So oral, personal, and home care products. So, it's kind of just not growing. Oh, and they're in pet nutrition. I wonder what pet brand they own, but pet nutrition. So 22% of all the revenue is up. But yeah, if we just go to their total revenue right here, this might be the bad news. This doesn't really beat inflation. The revenue's only up 1% year over year. Last quarter it was down by 3%. Good after tax net income though. They print 700 to near 800 million in net income a quarter. But we kind of just want to see the growth come back. This isn't a great balance sheet either. It looks like they have a bit of debt. You get a nice yield too. 2.6% yield. Nice. Even Square, so much processing fees. Oh, with Toast, yeah. Heading out. Thanks for all the tips. Hey, see you later, Brandon. Have a great rest of your Saturday. Hope everyone has a great rest of their Saturday. I will look at a couple more stocks here. I've been live for a long time. No one goes there. Always empty Wendy's. You know what's so crazy? Like where I go to this McDonald's, there's an Arby's, a Wendy's, and a McDonald's. And dude, the McDonald's is always packed, and then there's no one at Wendy's, so there's no one at Arby's. It's weird. Um, hey, I'll say this: the best restaurant stock out there that's really not a restaurant company, but it collects money from its franchises is McDonald's. They're a recession-proof, great dividend growth company. Like in 2008, the stock didn't even dip. They were the second best performing stock in the S&P 500 during 2008 because even in a recession, they do the smart thing. McDonald's is a real estate royalty company. Whenever you go into a recession, they actually acquire a bunch of cheap land. And whenever you go spend $100 at any McDonald's, spend $100 at any McDonald's, $4 of it goes back to this company as a high margin royalty. They're bringing back the monopoly stuff, dude. I'd like Wendy's is 1/100th the size of McDonald's. What app is this? Oh yeah, hey, thanks. Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, it's where you buy stocks on. It's a brokerage. I love it. If you want to, and it's an affiliate link too, full disclosure. So yeah, if you want to go to link tree and bio first link there, if you go and deposit $100, we'll both get like a fractional free like share of something, free stock. And I have all the apps linked up there too. I got Robinhood, Mumu. So anyway, let's keep going here. PODD. So this is a company that I do really love. I'm looking into this one. I want to make it a meaningful size position for me, but I want to really see the price come down. When I say I'm heavily watching this one, great business. I think they're going nowhere in the long run. They're having some troubles with their net income right now. These aren't one-time adjustments, but I expect it to go much higher in the future. But the growth is insane right here. Revenue's up 32 after 23. Like they have the best solution for this industry. So I really like Pod. McDonald's looks good. Thanks. Yeah. Hey, what up, Stocks Under? Good to see you. I see MicroStrategy going down eventually. The initial purpose, yeah, hey, it's kind of like a self-fulfilling prophecy. Whenever MicroStrategy would like dilute the shareholder by 20 billion and buy 20 billion worth of Bitcoin, you would literally see that on Bitcoin, like the buying orders, and it would pump Bitcoin, which would then in turn pump MicroStrategy, which could then make MicroStrategy issue more shares. So a little bit of Bitcoin's price is almost propped up by MicroStrategy, but that's also like a cool anchor for Bitcoin that like these new companies like MicroStrategy and Bitmine Inversion are just holding and diamond handing some Bitcoin. Thoughts on T. So yeah, this isn't a stock you want to really own in the long run. Like if you plan to retire in 20 years or something, you wouldn't want to touch this stock. So here's AT&T. It's the same price that it was back in 1997. It's had a great year though. It's had a great year, but mainly you're buying it for the dividend. You get a 4.1% dividend. They cut their dividend in 2021. It was actually seen as a good sign after they spun off Warner Bros. But with AT&T, kind of maximizing your dividend income here. You shouldn't expect much stock price appreciation. I'd rather buy just like a tech-heavy S&P 500 or a different stuff. If you're looking for like a 4% yielder, I'd probably look at like a Main Street Capital or Iron Mountain. Yeah. Maddie says, I got some money coming in. What tech stock should I buy? Hey, again, of course, nothing in this financial advice, not personalized advice, but I would just recommend like buy after doing your own research on it, invest in what you know. And I kind of follow this advice. I own it. Hey, we'll look at Okta after this. Like Meta, Google, McDonald's, Amazon right here, Coca-Cola. Invest in what you know. Invest in what you use too. And whenever you go to McDonald's or go on YouTube, you'll kind of be happy. You're like, hey, I'm gonna share. Let me go check around the McDonald's. Let me make sure everyone's doing everything right here. You're more excited about it too. It's just kind of funny. So let's check out Okta right here. At my college, the software we use is like at the bottom. I always see it like powered by Okta at the bottom right. So here's their stock right here. There's some sort of software company, maybe like, I don't know what are they just a cloud service provider? I don't know exactly. Authentication, kind of cybersecurity management. All right. So I like this one because they're like the most justifiable buy they've ever been. Because before today, if we looked at their net income, they were always a money loser, burning through a lot of net income every quarter. But now, for the past year, they're actually making real money, making good net income every quarter. Revenue single or double digit growth. I mean, double digit growth is good. Good balance sheet as well. Deleveraging. Free cash flow is really good as well. A couple $100 million a quarter. but they're kind of like seeing that this chart looks exactly like a PayPal. It looks like a Peloton or a DocuSign or a Zoom. Like here's DocuSign, for example. Like they all peaked in 2021 and have just been down ever since. So I don't know if they have a moat. That's the thing. I don't know if they have a moat. All right. So um which stock should we look at here? ISRG. Hey, what up, Jumbo? Yo, I love ISRG. If you're looking for a medical device company, this is one of the better ones. They make those huge like screening, X-ray scan devices, and they also service them. So they not only sell them to the hospitals, but they come in every now and then and service them, and they get nice recurring revenue. This one I'm recommending, not financial advice, of course, but because the financials are good. So check this out: 60% of the revenues are instruments that they sell, and check out the growth here. I mean, it just hits a new record every year, every quarter. There is no negative year-over-year growth rates in the middle here. So the revenue's up 18 after going 15, after going 20, after going 15. So that revenue's at a record. Then they also have their systems revenue. That's also up 28% to a new record. And then they have the services revenue. So super good growth over here. This is just a nice company. Look at this net income right here. This is their after-tax net income. They're legit making over 500 to 700 million of after-tax net income a quarter. These are insane profits, and they also have a phenomenal monster balance sheet. Literally no debt at all. That takes so much risk off the table. A huge safety net, 5.4 billion of cash, no debt on the books. Just great news. So yeah, cash flow looks just as good. And, no dividend on them yet, but maybe they'll do some share buybacks or something. Pretty cool. Where do you think Meta will be heading, dude? Meta, this is in the long run, this is an $800 stock. Easy. It didn't get to $800, but I think it will. I am totally biased. I am a shareholder, but yeah, has anyone seen the new Meta Ray-Bans? Are pretty cool. They just introduced ads to WhatsApp. That's a huge earnings tailwind. They also their Threads app. Has anyone heard of Threads? It's a competitor to X. It now has the same amount of daily active users as X. It's pretty crazy. Yeah, if we go to, but here's Meta right here. This is a cool metric we get. Their daily active users on Meta, Facebook, Instagram, all that is 3.48 billion. And they print money, 15 to 20 billion in net income a quarter. It's a $2 trillion company with 40% net margins. This advertising company prints money. So Meta's a beast. Yeah, the Threads app is really popular now. They're like, have you checked out Workday and Oklo? Oh, Workday and Oklo are similar. Okay, cool. Oh yeah, here's a cool one. Yeah, tech heavy growth ETF. That's not QQQM. You really just want QQQM. Maybe you'd go pick like a tech specific ETF, like a cybersecurity ETF. Maybe a cybersecurity ETF. Yeah, that's not, actually I might look into one of those, like a cybersecurity ETF, the lowest expense ratio. Hey Hector, no way, dude. Thanks for the gummy bear. No way, dude. Thanks for that gift there. I appreciate that. Sold too soon, but win's a win. Intel's been going crazy. Well, let's see here. AMPH. This is Ampfaster Pharmaceuticals. So let's check this out right here. Hey, I actually just bought a little bit of Axon. So here's Ampstar Pharmaceuticals. Let's see how they're doing. So other products. So they sell these prescriptions right here. Let's see. Baqsimi, that's up 51%. Prenestane. Well, let me just go to the analyst expectations. So revenue, they slight beat on revenue. They beat on net income, and they beat on EBITDA. That's actually probably why they gapped up on earnings right here. That's why they went up so much, because they reported earnings and it was better than analysts expected. Maybe they rose guidance as well. Yeah, look at that. They popped up 5%, then another 5, then another 5. That's crazy. So even though the revenue was down 4 and the net income was down 18, analysts were expecting worse than that. So at least they're still making net income every quarter. That's the cool thing. They're still making 30 mil in net income a quarter. They're only a $1.24 billion company trading at 10 times net income. That seems pretty fair. But it's such a small company. There's so much risk, of course. All right. All right, couple more here. Adobe, ISRG, Salesforce are still cheap. Yeah, Adobe and Salesforce are really getting hurt by the AI thesis, which is unfortunate. Fidelity Core Dividend ETF. Let's see what this owns, and it's at an all-time high. So it looks like it's pretty much kept up with the S&P 500. Let's see, you get an over 3% dividend with this one. Pretty cool. And let's see what its holdings are. Breakdown. It's just a basket. So its largest holding is Nvidia, Microsoft, Apple, then Broadcom, and then JP Morgan. JP Morgan is a phenomenal dividend growth company. They're at an all-time high right now, and even though they're at all-time highs, they still have a 1.7% dividend yield. Then Visa, PM, PM, ExxonMobil, MO. These are all the higher yielding names. They might be better than SEHD. I don't know. Yeah, HRL, is that Hormel Spices? That's like that spice company. Yeah. Someone said, Constellation Energy thoughts. Yeah, hey, what up, Darren? Yeah, Constellation Energy, this one is overvalued right now, but they deserve to be at an all-time high. This is your largest nuclear energy play out of any other publicly traded stock. This is the largest, purest nuclear energy stock. They literally own 30% of all the US's nuclear reactors. So best nuclear stock out there. They're also acquiring Calpine, instantly accretive, $2 a yearly EPS and $2 of free cash, or $2 billion of free cash flow. So Hormel Foods, this company sells a bunch of spices, basically a bunch of commodities. Like if you ever go to a store and you go to the spice section, pretty much all of it is like Hormel Foods. So let's see what they're doing. You get a nice yield. Yeah, look at that. I think they're a dividend king as well. A 4.7% dividend yield. So a pretty insane dividend, but they're not growing too fast. So actually, this is good news at least. Revenue's up 4.64, but that's after falling 2. But, this is a commodity people always need, but I just don't know how much pricing power they have. 6-7% margins. Margins did fall a bit, but still, they're making 180 million in net income a quarter. Let's go see how much the dividend cost. They made 100 million in net income. The dividend cost 160 or 159 million in net income a quarter. So do beware that the dividend payout ratio, 159 million at the top there. I would be careful at the high payout ratio. Trey, what up? He said STRF. Let's see. Luckily, I got into AppLovin early. Yo, dude, AppLovin is a great company. Great company. Any news on Sprouts Farmers Market? No, it's just kind of momentum right now. It's kind of crazy. Sprouts Farmers Market's just kind of been struggling. So this is the strategic 10% perpetual. This is some sort of bond or something. I don't know. What is this? Software application? Well, there's no analyst expectations. This is weird. I don't know what this is. Wish I could give you thoughts on them. They just IPO'd. Is that a dividend? No dividend. Then was that a stock split? No, it's a dividend. I don't know much about that company. I'd be careful. Sorry, that probably wasn't too helpful. I apologize. So, I stopped buying SHD and went to FDVV. Hey, I understand that. More than Oklo? Yeah, dude, Oklo is a startup. Oh man. They're saying I'm AFK. Here's the thing. I've looked at all the nuclear stocks out there. Oklo, SMR, VST, CEG. CEG and VST are the only decent ones. Like this is Oklo. They're trying to make the small modular reactors, the SMRs. And by the way, these small modular reactors are just a proof of concept. It's years away. Did you know there's only 3 running small modular reactors in the whole world, and none of them are in the US? Like we are so far away with Oklo. And this right here, this is such a bubble in my opinion. Constellation Energy deserves to be at an all-time high, but not this one. This is an $18 billion company. Like they're 20% the size of Constellation Energy. They're an $18 billion company. This is literally a startup. If we go to revenue, it says no data because they've never sold anything. They've never sold a product or a service, and there's no clear path to selling. Anyway, Oklo is a meme momentum company, in my opinion. Bruno said, "What's this app called?" Yeah, hey, by the way, if you want to get this app I'm on, it's actually where you buy stocks on. It's my favorite one. It's in the link tree in my bio, the very first link there. I love this one. So yeah. Link tree bio, very first link. It's an affiliate link, full disclosure. And yeah. Let's see. A startup listed publicly. Well, pretty much that's what it is. They've never sold anything. They don't plan to for years. It's just tough with Oklo. Or it's just hard to trust, especially $20 billion market cap. It's tough to trust money in Oklo when the 20 you're paying 20 bill for 18 bill for a company that doesn't sell anything. Risk reward doesn't look great. As you know, I like looking at the fundamentals, the financials, and there's nothing to base that off of. Oh, someone said Novo Nordisk. You know what? Wait, ARGX. I want to get to all these. I apologize. Wait, this is a SC. So this is not an American company, I don't think. Let's see. Where does this company's oh, well, wait. Let me double check this real quick. Oh, dude, my Wi-Fi just like oh so yeah, so this is a company in the Netherlands. So this is a Netherlands company. So you might get like a weird tax form, but that doesn't matter because this stock is at an all-time high, man. That's insane. So let's see what they do. Well, look at the orange line. The orange line is what the analysts expect. They're beating like crazy on expectations. They beat on revenue, beat on net income, beat on EBITDA every quarter. And yeah, they're super profitable. They're making a couple hundred million in net income every quarter now. The revenue is up 99% year over year after growing 75, after growing 259. Whoa. Oh my goodness. And every time they make net income, they just retain this because they don't have any dividends. So their assets on their balance sheet just keep growing. Dude, I can totally see why this stock is at an all-time high. They deserve it. Wow. You know what? I'll put them on the watch list. That's insane, the growth there. Congrats if you're in that one. So Jimbo said Novo Nordisk. Let's see right here. This is the company that's the weight loss prescription. They sell Ozempic. So if you heard of Ozempic before, Elon Musk is on Ozempic, Wegovy. This is the stock that actually owns it. And check this out. You get an insane yield, a 3% dividend yield here. But one reason why the stock has been struggling recently is because of how uncertain the future is. Like if you go to the PE, which is net income multiple, they're trading at 15 times net income, way lower than the industry average of 25 because of how uncertain the future is, because they lose their exclusivity for Ozempic in about 2 to 3 years. So they've seen a lot of increased competition from Zepbound and Eli Lilly. So Novo Nordisk loses their exclusivity, which is unfortunate. So, but for right now, the business is booming. It's doing incredible. I mean, they're making pretty much $4 billion in net income a quarter. So yeah, or even more. They're a European company. What is Simrise? Yeah, what's the ticker symbol for that stock right there? Maybe I can find it for you. LAWR stock. It's a funny company. Robot Consulting. And hey, then we'll look at CAT. Okay, so let's see right here. Robot Consulting. This is a Japan company, so we'll convert their currency from JPY to USD. All the revenue comes from Japan. So let's see. Do they have sales? For the full year or the fiscal year 2025, the revenue is 4.5 million. Yeah, that's not great. No sales, and the balance sheet now has a lot more liabilities and assets. The net income's negative. Yeah, I don't know about that one. It is funny. So CAT right here, this one is a nice stock right here. I honestly think they might go higher, but would I buy them here today? Probably not. But this is a good company you want to buy and never sell. You get an over 1% dividend yield. Like, look at the yearly dividend. In 2020, it was $4. Now it's $5.40. So you get a 1% dividend that grows every year. The PE is really fair. Net income multiple is 25. They're diversified, 47% is energy, transportation. Then they're in construction, resources. They all want to use their heavy machinery, and they make good net income. 2.5 to 2 billion in net income a quarter. It's pretty good, the profits on CAT. So yeah. Should I dump Coca-Cola? I don't think Warren Buffett would be too happy about that. Coca-Cola, I'll say this. If you plan to retire in like 25 years, I probably would sell Coca-Cola to buy something more growthy. I don't know your situation, so that's why I always say none of this is financial advice, personalized advice. But here's the thing I really like about Coca-Cola, though. 2.99% dividend yield. It's good enough for Warren Buffett to own. It's literally 8.6% of his entire portfolio. So you're buying that for the 3% dividend, but I'm a believer that Coca-Cola will not outperform the tech-heavy S&P 500 in the long run. So if you maybe have another 10 years or whatever, you don't need the income, maybe switch to the S&P 500, something more growthy. Can you check out WTS? What is WTS? This is Watts Water Technology. So look at that. Wow. All-time highs on this one. So congrats if you're in this name. You got to be up on your position. You get a 0.6% dividend yield, 19% payout ratio is pretty fair. What do they do? Residential and commercial flow control. Huh. Oh, so they're a HVAC play, heating, ventilation, and air conditioning. How's that business doing? Um, Let me see. Yeah, sorry, dude. This Wi-Fi does not want to work with me. By the way, if y'all want to hit the follow button, we stream every single day, sometimes twice a day. I sell nothing. I have no course book, WhatsApp, Telegram. I'll never follow you. I'll never DM you. Watch out for people impersonating me. But yeah, here's their HVAC business. That's down a little bit year over year. Let me just see this right here. So total revenue is up 7.7% year over year. And the net income is up by 23. So they were actually able to expand margins. Yeah, that's a nice margin growth. Is it ever? It's never been over 15% ever. So they had their record net margin quarter, but that's good. That's how they made 100 mil. And you get a 0.6% yield. They're beating, whoa, were they beating on expectations? Let's see. Yeah, look at that. The orange line is what the analysts expected. Huge beat on revenue, big beat on net income, and a big beat on EBITDA. You know what? I'll put them on the watch list. They're at all-time highs. That's crazy. Jason said XRP. Hey, that's a crypto. We don't really look at crypto on here because I just can't give you any thoughts about them. Like when we look at a stock, we go and look at their financials. But I guess that's a cool thing about crypto. They don't report earnings. You don't have to worry about Ripple missing on their net margin or something like that. So yeah. MRK, TMO. I don't love either of those. Both are just super slow growing. But let's look at Oracle right here. They had a huge upward revision to their guidance. Hey, what's the ticker symbol for SEALQ? I don't know what. Give me the ticker symbol. We'll check that one out. But here's Oracle right here. This one's pretty close to an all-time high. That's because when they reported earnings, they showed like a 330% billings backlog. That they haven't fulfilled yet. That came out of nowhere. They announced they're opening up like 21 new data centers. It just really benefited the whole AI ecosystem. They're going to be buying a bunch of NVIDIA chips, AMD chips, and those data centers will need Supermicro to install them, and then they'll need Constellation Energy to power them. So it's kind of cool. But yeah, this is your main cloud play. It's a big cloud service provider. They make good money. Again, the numbers this quarter were bad. They missed on every metric. They missed on revenue. They missed on EPS, which is net income. But it was the future guidance that sent the stock up. But yeah, they're making $3 to $3.5 billion in net income a quarter, and that future guidance is really interesting. See what'll happen. So it's just, I don't love that one though. They have a high yield. A lot of their money gets eaten up to the dividend, and they have like a $70 billion of debt to pay. I like, they're also seeing competition from AWS Cloud, Google Cloud, Microsoft Azure Cloud. But they're the ones that seems to be getting all the deals. Oracle also just got like the rights to the US version of TikTok data storing. So that's going to be stored in the Oracle Cloud. That's pretty cool. Should I move from SEHD to VOO? I'm 15 years from retirement. I think so, Jerome Powell. I actually went through that same realization. Y'all wouldn't believe this. Actually, you would. If you go to my channel right now, hopefully I don't show anything I'm not supposed to. If you go to my channel right now and just click on oldest videos, if you go to my oldest videos on YouTube, it's literally me talking about my covered call high dividend yielding stocks. I used to own all the high yielding stuff. I kid you not. So like, look at this right here. Look at my dividend income this month. Like $100 dividend from EXR. 112 from NSA. Arway paid me a $240 dividend. I was receiving, this was in 2023. I was receiving all these crazy high dividends, but then I switched my strategy because I'm focused on total return, not just what I receive from dividends, but dividends plus stock price appreciation. You focus on total return, and that's really what I like to buy. I like to buy companies that pay dividends, but the dividends are super low payout ratio. So they have a dividend, but the payout ratio is so low that they leave themselves a lot of money to invest in the future, do share buybacks, or do whatever with it, all without having to dilute you, like Comfort Systems. Andrea said DB stock. What is DB? Duchess Bank. Okay, so yeah, this is, the banks have been doing really good, like JP Morgan, too big to fail. Let's see what the yield is. These banks, let's see what the dividend is. Dividend, a 2.25% dividend, a safe 33% payout ratio, not too bad. But yeah, they're an investment bank, private bank, corporate bank. And then what I like about these are their asset management business because they collect a little high margin asset management fee. And look at that, it's up 20% year over year to a new record. So that's cool to see. If we just go to net income right here, if you average it out here, they're easily making over $1 billion in net income every quarter, plus the dividends. So yeah, they're a cool bank. What's the worst stock or ETF you have gotten entangled with? Probably like ChargePoint, man. I lost so much money on CHPT ChargePoint stock. Yeah, and actually, I'm so glad I sold them like up here. So glad I sold them for a 60% loss, and thank goodness I did because it continued to fall more and more and more. So, um, wait, BOTZ, Global X Robotics ETF. Wait, really? So, that's interesting. So, if you're looking for a robotics ETF, check out this one right here. Let's see what it owns, though. So, NVIDIA, where's Amazon, bro? Amazon is like, Amazon's the best robotics play, so they should add Amazon, but they got NVIDIA and then ABB and some of these other like Chinese stocks like 6954 and 6383. So maybe those are some other robotics plays, but I'm just not familiar with a lot of their top holdings. Pretty much none of them except NVIDIA. But that's interesting. I'd probably pick and choose my robotics plays. If I was looking for robotics, pure robotics play is Symbiotic. They're a warehouse robotics company that helps out Walmart with their warehouses and logistics using robots. And I kid you not, they have over 1,500 registered IP and patents. And Walmart loved them so much that they took a stake. Walmart owns 13.5% of all the shares here, and they have real growth or real sales. What app is this, G? Hey, what up, Smile? By the way, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on. It's a brokerage. It's my favorite one, especially for analysis. I have Robinhood as well, and I have Weeble, but this one's great for really fundamentally analyzing a company. And it's the lowest fee brokerage I found. I keep my idle cash in here, 1,000. So let's see. Oh, LAES, we got to see. Oh, yeah, this is, I think, one of the quantum plays. Let's see. So if you look at the top right, they're really tiny. So do beware. The whole market cap is 640 mil. That's an extremely small market cap. But so there's actually, no, this isn't a quantum play. My apologies. It looks like semiconductors are most of the revenue. So they're a semiconductor play. Let's see. Do they have sales? They don't. So that's one thing I would find hard to trust. I judge a company off their like revenue and financials, and like, this doesn't look great. The revenue's down. These are down 63% from 2023 to 2024, and they're losing 20 mil in net income. They're losing 10 mil a quarter, and the momentum has been good on this name just because the momentum on everything has been insane right now. But yeah. Thoughts on Berkshire Hathaway? Yeah, BRKB. BRK. This is Berkshire Hathaway. We actually recently switched to Geico. This is like this is Warren Buffett's like S&P 500 alternative that has outperformed the S&P 500. And they own it. It's like kind of like an ETF. It owns a bunch of different companies. It owns stakes and stocks as well. But yeah, they're in insurance. If you heard of Geico before, we just switched to Geico. And we actually saved money doing that. We have like this app on our phone where you got to have the app on your phone while you drive. Or anyway, that's over 100 billion of annual revenue for them, and that's just one business. They're in manufacturing, McLean, Pilot. They own the Pilot gas stations. Anyway, Berkshire Hathaway is really interesting as like an S&P 500 alternative. Pretty cool. Trick to retire early is with passive cash flow. Jumbo said Reddit. Yo, I love Reddit. I do own them. I might be biased. They're in my super growthy portfolio. And yo, Mark, no way, dude. Mark with the 3 lightning bolts. Thanks so much. You said, believe their niche is quantum chips. Oh, when we were talking about LAES. Okay, for LAES, thank you. So here's Reddit right here. This company is a growth beast. A lot of people think Reddit is just a meme stock, but this company is no meme. They have real good growing fundamentals, like more than analysts expected. Let me just show you that. this is what the analysts expect. The orange line, they are constantly every quarter beating on expectations. They beat on revenue. They beat by double on net income. Like EPS was expecting 18, they reported 45. And huge beat on EBITDA. Their ARPU, their average revenue per user, is up 48% year over year. So they're literally making 48% more money per user than they did a year ago. I talked to people doing ads. Like you can run Instagram ads, Snapchat ads. And what they found is Reddit right now gives you like the best return for your money if you're trying to run ads. Like more so like you're making like the impression per dollar, and the thing you're making is like you get much better Reddit. But anyway, like I see people say, someone says short Reddit, buy AMD, or yeah, hey, I will short this. Yeah, hey, I get that. But the fundamentals are amazing on Reddit. Who expected this? I didn't expect this. The revenue's up 77% after it grew 53, after it grew 23, and it's not just, revenue, they're making after-tax net income every quarter. And look at this phenomenal balance sheet. Like I'm judging, like forget the name Reddit. Like I couldn't care that the name is Reddit. I'm judging them off their financials, and the financials are great. They have over $2 billion of cash, up from $1.7 billion of cash. They literally have no debt at all. The free cash flow is insane. Let's see, FCF. Yeah, up 3x. Like this is a growth company. And by the way, if you're like, I'm biased. I do own Reddit, by the way. So I forgot to mention that. I'm up 115% on Reddit. Do I think it's worth buying now? Probably not. But they're interesting as a growth company. I bought them during this like April dip down here. I bought 4 shares of them. And again, as much as I love Reddit and as much as I love a lot of these stocks in here, you don't want to have them as super high positions in your portfolio, like Robinhood, SoFi, Reddit. They're fun money positions. You just put a couple $100 in them. You don't put a meaningful amount of money in them, but you let them appreciate into crazy big prices. Adrian said, what app is this? Yo, I'm not sure what app you were talking about. Hey, by the way, I have multiple apps right here, or these are all brokerages right here. So all the brokerages I'm using, like there's this one right here. All of them I'm using are in the link tree in my bio. Robinhood, all of them. So yeah, not sure which one you're talking about. This one is this is my favorite one right here. Very first link in the link tree in my bio, best analysis, lowest fee. A lot of people like it. Just keep your idle cash in here because you get the 3.85% APY. So yeah. Let's see. I'm not familiar. I think they're pretty hot on AI automation. Oh yeah, for that robotics ETF. Yeah, that was pretty cool. So let's see right here. CRDO has insane revenue growth. Yeah, CRDO is. I'm about to hop on Robinhood. Hey, nice, Joseph. Hey, if you want to get Robinhood with my affiliate link, so if you like sign up and deposit, we'll both get, you ready for this? We'll both get a $5 fractional free share. So, hey, and if you sign up for Mumu, I think we both get like a $10 or $20 fractional NVIDIA share. And with Weeble as well. So yeah, if you want my affiliate link, they're all in the link tree in my bio for Robinhood, Mumu, and Weeble. So I'd appreciate that. But yo, I'm actually going to hop off the stream right here. I hope you guys have a great rest of your day. I've been streaming for 3 hours now. My head's starting to hurt. But yeah, hey, by the way, best way to support me is just subscribe to my YouTube channel. YouTube channel is called Nathan Roberts. Also in the link tree in my bio. And if you missed anything, want to replay the stream, you can do that. That's what's so cool about the YouTube stream. Thanks for everyone who showed up. Pool has good revenue growth. Oh, I forgot to look at Pool. Yo, that Warren Buffett just bought a bunch of Pool. Dude, Pool has like an absolute monopoly for the pool industry. So anyway, actually I'll end the stream with a quick portfolio update. Again, this is my buy and never sell portfolio. Once I buy a stock in here, I literally try and never sell it. And we hit an all-time high, I think, on Friday. Yeah, year to date, we're up 59%. And all time in here, we're up 134%. Down here, that's the S&P 500. Compare that, it's only up 60%. Yo, you don't even have to start with a lot of money. Like, here's the thing. For years, this portfolio, look, at the top, it was $160. All these blue little dots that when I deposited, like, you start with $100 and then you slowly, like, you get addicted to it. Like, you'll stop wanting to buy. Like, I used to buy stupid stuff like shoes, but now I'd rather buy stocks. So, yeah, anyway. That's that portfolio. Then we have the Robinhood portfolio. This is our dividend only portfolio. If you look in the top left, yeah, it's called dividend only. We also have a Roth IRA, but year to date, we're up 14.6%, which is pretty cool. Yo, does anyone remember April? Dude, as long as you just didn't sell, dude, I hate this new UI. Okay, so yeah, April, we were down like 13, 14%. All you had to do is not sell and you're doing amazing. And these are all the stocks that I chose to buy in my dividend portfolio. You've probably heard of a lot of these because all these are in the S&P 500. Meta, Google, United Rentals, McDonald's, Constellation Energy. We also have a Roth IRA in here. Our Roth IRA just actually hit an all-time high thanks to Data. We literally started our Roth IRA exactly a year ago, or just over a year ago. But I'm trying to deposit more in here. But yeah, these are all the stocks that we own in here. Data has been our main performer. We're up 150% on them. And then finally, we have everyone's favorite, our super risky Weeble portfolio. If you look at the top left, this is our all-time open profit and loss. We're only up 13% all time in here. We have some hidden losses in here. I just love being fully transparent. I go to a bunch of other TikTok streams, YouTube streams. No one ever really shares their portfolio, but I like sharing everything. But yeah, look at this. We do have some big losers in here, but we also have some big winners. And some of these winners, like Robinhood, SoFi, I regret every share I've ever sold in them. That was some of my biggest regrets. Selling out of, like I have 5 shares of Robinhood left. I sold 50 of them at 36. So anyway, that was the stream. Again, best way to support me is subscribe to my YouTube channel. It's called Nathan Robert. Again, watch out for people impersonating me. I'll never follow you, DM you. I sell nothing. I have no course, book, WhatsApp, nothing. I do have an affiliate links though. That's the one thing I full disclosure. So if you wanted to get any of these apps I'm on, like Weeble, Mumu, out of all 3 of these apps, the number one I'd recommend the most for actual like useful analysis is this one right here. It's in the link tree in my bio, the very first link there. But yeah, anyway, see you guys later. It's an affiliate link too. So actually, if you go into pause at $100, we'll both get like a free shares. Anyway, see you guys later. Hope you have a great rest of your day. And if you go leave a comment, say you came, go leave a comment on my YouTube video, say you came from the TikTok, I'll leave you a nice reply. Thank you. And hey, thanks to everyone on the YouTube stream. See ya, Adrian, Frank, max out the Roth. Yeah, you're right, Frank. That's what I've been trying to do. Max out my Roth IRA because it's so OP. The tax, like it's so OP. They only let you put in 7,000 a year. We've put in 2,000 so far, and I like the Robinhood gives you a little match program. But yeah, see you, Sakib. See you, Elite. And hey, thanks again to Tommy. Oh, and who was the other guy? I remember his name. Tommy won for the $5 super chat, and was it Matty, Mati, for the $5 super chat as well? Anyway, see you guys later. Have a great rest of your Saturday. We'll be streaming.